The government printing presses, they're wrapping up. They're heating up. Deficits are close to 50-year highs. We have gold over 2K. Bitcoin's had a hell of a year. You're not going to want to miss the next 2 hours.
Hard money.
Buckle up because Grizzle Hard Money starts now.
Boom, boom, guys. We had a heck of a day yesterday. If you were sitting through uranium one-on-one, battery metals one-on-one, it was like your digestion, you know what I mean? Like, just stick with the Grizzle cons and you're good, man. The conference was off the chart. Today we got an incredible schedule. The timing could be more perfect, Scott. Like literally where we sat with uranium, where we sit with the base metals, the value opportunity, and clearly here with gold breaking through 2K. We got a hell of a lineup for you guys, and you're not gonna want to miss it. We're gonna kick it off.
We gotta thank our sponsors to start. People who can make it possible.
Yes.
Let's start. So we got Dolly, Varden, Silver. They're one of the fastest growing mineral exploration companies, and your leverage play on silver. And we also got to thank 314 Research. They're the next generation of investment research. Check them out at 314research.com. And lastly, we got Grizzle Research and Quant on Substack. Yours truly, using the power of quant and fundamental research to find investment ideas with asymmetric upside. Visit grizzleresearch.substack to learn more.
Boom. Guys, thank you so much for sticking through yesterday, which was an incredible day. We got a ton coming at you today. Scott, who do we got on deck?
Ooh, we got Warren Pies, the founder of 314. He's been killing the economic forecast every which way. He's coming up next. We'll be right back. Warren,
what's up, man? Welcome to Hard Money, man.
Hey, thanks for having me.
I feel like we just saw you, wasn't so long ago. We were a bit more casual, but we got to do it up for Hard Money, man. This is the conference.
Yeah, y'all are making me feel bad. I mean, you look sharp. Very sharp.
Hey, listen, just tell us which hat you want. We made a whole selection of hats. We got nuclear atoms, the whole deal. Warren, listen, man, you've been crushing across the board, specifically on the commodity front. And I just want to, hard money is very akin to hard assets, right? And maybe you could talk through, that's just such an important place we're at right now. Maybe you could talk through the importance of hard assets in the current economic backdrop, but more importantly, how you think of it in a portfolio context, because I think that's where you've really highlighted how this fits.
Yeah, I appreciate y'all having me, and it is right up our alley, and this is where we've spent a lot of time, and we've spent this really going through into the pandemic, out of the pandemic, thinking through how to diversify portfolios and what that looks like versus history. So history has been, and it's kind of, the death of the 60-40 portfolio and all of that has been discussed ad nauseum, I think, but it's a real thing. It's not that this 60-40 portfolio is going to die, as we've seen the last month. The thing has killed it. It's that stocks and bonds are moving together in this environment. When you inject inflation into the backdrop for really the first time in a quarter century now, it changes the relationship between assets, which changes how your portfolios move. And the upshot, I think, for hard asset investors is that everybody's going to be looking for ways to diversify their portfolio in this environment, because bonds are increasingly going to be driving your portfolio's overall direction, much less hedging it because of economic weakness. So that to me is the big upshot. And so it flows into hard assets, and hard assets is the main diversifier. So you can look at gold, oil, energy, commodities, things like that. And our main focus has been on really oil and energy as that diversifier in this world.
Makes a ton of sense. And there was a tweet, and I was trying to find it, but you'll give it a lot more. You'll give it more context. You had a great retweet. It was about the fact that in a world where diversification is hard to find, things like hard assets are going to get that bid. Like it was an interesting way to think about it, right? In the view of like, listen, from a large asset allocator's perspective, now you got to go out and find that diversification, and whatever you were bidding, 3 years ago is, that demand is much higher now. That like you had a good tweet on that.
Yeah. So I appreciate that. One of the ways I would say is this, and it's what a confusing environment we're in right now. I'd say we're a late cycle environment, which I think investing in general is a test for your tolerance of ambiguity. And I think a late cycle environment is especially true in a late cycle environment, because we're at this place where what comes next in the economy looks really the same as we stand here today. We could have a recession or we could have a soft landing. I'm agnostic. I'm just taking data in and assessing it. But what I would say is that the odds of a soft landing, or at least avoiding a recession in the next 12 months, have really gone up over the last month based on the data to me. And I'm happy to get into that, but I think it's a longer conversation. But the bottom line is, if you look at how assets have moved over the last month, they're moving with that view. So everything's kind of converging into this soft landing world. And maybe that's where we go. Like I said, it's probably better than 50% chance that we avoid a recession. I just don't see the case for a recession near term right now. So what can upset that view? What moves different from a soft landing? So if everything's priced for a soft landing, it puts a premium on assets that might disrupt that soft landing thesis. And the number one asset that could disrupt the soft landing thesis, in my view, is oil. If we were to have a spike in oil, I don't see that imminently, but you need to carry that exposure, because many of these things that can cause oil to spike are by definition unpredictable. So, that's what you're doing. So a lot of people would say our mantra at 314 has been, you want to be within your equity portfolio, for instance, you want to have double the energy sector exposure versus the benchmark. So S&P 500 is like 5% energy. We've been saying be at least at 10% energy. This has been something we've been saying going all the way back to the beginning of 2021. In a down period like this for energy, it doesn't scare me. In fact, it's telling me energy is kind of doing what you want in a portfolio right now. So you want energy to go up when stocks and bonds are going down. And if it goes down when they're both going up, then you can live with that. That's the life of a diversifier. That's how, in my view, that's how a quant looks at it, how a quantitative minded investor and diversifier looks at it. It's not whether energy's up or down. It's like, is energy performing how we expect it to? And our thesis now for going on 3 years is that, yes, there are secular tailwinds for energy, but more important than that is that energy is going to move counter to the dominant assets in your investment portfolio, stocks and bonds. And so that has held up here in recent weeks, while stocks and bonds have ripped and energy's kind of lagged. It's what we want to see, honestly.
Right. And that translates to your portfolio volatility, and that's why you got that double weight, really.
Right. If stocks and bonds move together, your portfolio vol goes up, and so that to me is it's weird things start happening. You have to degross and things like that. So in energy, anything that you add to a portfolio that has a low or negative correlation to the predominant assets of that portfolio, it's going to lower your portfolio volatility. And that's what we like. And of course, yeah, we can get into the secular story for energy, but I think that there are secular drivers. I'm not we're not bullish on oil at the moment. Right now, our models are neutral, but I think that doesn't negate the need to have that increased weight for the diversification purposes that we've outlined.
And again, the equities versus the commodity, right? Like, would you say you're more constructive on the energy equities?
Honestly, to be honest, not really.
Yeah. Okay.
Here's my problem with energy equities is it's become, over the years, there's been a migration of market cap into downstream energy. And I really don't want to own downstream energy in this environment. You're getting more supply of refiners. And by downstream, I mean refiners. And those aren't really oil sensitive. So you want to pick your spots on the energy sector. If you're going to just make a broad energy sector call, that's fine. You're going to get a lot of integrated exposure. It's really Exxon, Chevron, and that's what you're buying with that. Our preferred area of energy equity exposure is to pick your spots. We like high quality, large cap Canadian producers.
Right.
That's been what that's been the theme we've ridden since 2021, really. And so that's what we would go with. And then on oil, I like oil when it's in backwardation like this. You get a positive carry on it. And so, in general, I think that it's not as clear cut that I would say I like that the energy equities over the commodity itself. In fact, I think for pure diversification, if you can trade oil, that's where you're going to get the best bang for your buck. And especially when we're in backwardation like this, you can ride that positive carry.
Yeah, and Warren, talking about trading oil, you traded it perfectly. And when we last had you on, you're like, listen, you call the bottom topped, and now, so where we sit right now, how do you constructively oil over the next 12 months? How are you seeing this going forward?
I mean, today is the OPEC meeting, and that's what makes this interesting. Is it wasn't supposed to be today; they delayed it to today, right? And so now I'm kind of waiting to see what they say. The rumor or the headline is that there's a million barrel a day cut, but we don't really know if that's coming off actual production or quotas, and that makes all the difference in the world. How how those cuts are divided up. My concern for oil in the near term is that every time OPEC cuts, it adds spare capacity. That has to come back, and that caps upside. And so I think oil's range bound here for a little bit. You just need to trade that range. The thing that has allowed us to trade the range successfully has been watching hedge funds when they get overextended on the short side and long side. They're much closer to being overextended on the short side. We'll see what happens coming out of this meeting. They can close those positions out quickly. We haven't had a fat pitch here for a few months. Yeah. But if we got a nice downdraft, we're closer to looking for a spot to go long than short, let's say. If we got a nice downdraft in oil and we saw those hedge funds dial up short positions, that's what we'd be looking for. But for now, I think we're range bound for a bit until we get some more extreme.
Warren, I can't thank you enough, but I got to ask you one question because it's hard money, and I got the Bitcoin right at the end. And I know you don't tweet a ton about Bitcoin, but I got to give me a throwaway. Will institutions ever buy it as a diversifier? Like, how are you viewing it?
Yeah, I think so. I mean, we have a broad 20 asset model, and we included Bitcoin. I mean, that was one of our initial decisions as a firm. And the reason we did that is we looked at it. I mean, we again, everything we do is kind of, we're neutral on, we're not a perma bear, perma bull, perma anything. We just want to know, is there a use case for this asset? And when we looked at Bitcoin, we thought there was a use case. And I think that there is with the ETF approval and things like that, that's on the horizon. I think that there's an argument for broad adoption. And Bitcoin it marches to its own beat, which is what you want in these assets. So you throw these assets that move in their own way into your system, and then trust your system to sift through them and get you overweight and underweight at the appropriate times. I think Bitcoin diversifies your portfolio in this world that we're talking about. So it's a buy for us.
Warren Laser Eyes Pies. Listen, I didn't know you're undercover Bitcoin for fun. I would say if Twitter found out, holy shit, man, you'd have 300,000 followers. If you're writing books, Laser Eyes.
Instead, I'm just picking up
promoter.
nickels and putting steam rollers with oil tweets. So what do I know?
We're not getting you the distribution you need. Listen, man, a new profile, laser eyes.
Off to the races.
I see that works for Bianco.
So, I appreciate the time, and obviously crazy day. Thank you for taking the time out, man. Appreciate it.
Yeah, thanks, Warren.
Really appreciate y'all and the support you've given us. So thank you.
Of course, man. That was Warren Pies, man. What a superstar. You know what? I had no idea about the Bitcoin, man. That's what? Great. But like the way Warren thinks about the world and the way he thinks about how you construct a portfolio, be agnostic. Don't let emotion carry you. And it's just so methodological.
Yeah, see what the asset gives you,
it's
right?
just like, listen, that to me, and it's interesting because I follow Warren closely on Twitter, and all of it is just so clear. And that view on Bitcoin it's a great one, because that is the way institutional asset allocators should think, right?
Yeah. Now, Tom, before we get to our next guest, we gotta ask. Hit the like, hit the subscribe, get the word out, because we got a big next guest coming up.
Absolutely. So we Eric, Baz, how are you guys? A big shout out to everybody on Twitter.
Good morning, everyone.
Good morning. If you guys are on Twitter, hit that retweet, hit the like. Now, Eric's like, good question. Ask everyone if they think a BTC can be fully institutionalized. This is the big question, right? And well, we're going to have a big interview with James Seyffart with respect to what we're going to see on the institutional side with how many of these Bitcoin ETFs are there?
Ooh, there's a lot lined up. He's going to have the answers for us.
Yeah. Hey, guys, stay tuned. We got Bob.
We got Bob in the house, everyone.
Hey, how's it going? We're having too much fun while we were warming up here.
YouTube. When Bob. I gotta say, I flubbed a lot of intros, but that was one hell of a flub. We got Bob down the street. My neighbor.
I'll take
popped in. Bob. I wanted man on the street Bitcoin. Oh, man. Bob Elliot, thank you so much for joining us. Unlimited. We got all the superstars from Twitter out today. It's just tomorrow, Bob. Go ahead. Sorry.
You just had Warren on. What a great segment with him. And little did we all know that Warren is a Bitcoiner, quietly a Bitcoiner.
Right?
We outed him here on Hard Money.
Wow. That's breaking news on FinTwit right there.
Here first.
Oh, man. He needs those laser eyes. He can't be like, at least wear sunglasses in your profile. If you're trying to hide it, if you're trying to be down low.
All right, Bob, I got to jump in, and we're going to kick it off with a little Bitcoin talk here. So, we talked to you at our last Hard Money conference about what you think of Bitcoin, and I'm paraphrasing here. You basically said you haven't figured out what drives it yet, and that's what's keeping you out of the market. Now, I'm wondering, has the recent news flow or price action changed your opinion since we last spoke?
Well, I think it has changed my opinion, or evolved my opinion, sort of in two ways. One, I think the question is, are the sort of macro drivers that often get connected to Bitcoin the things that are driving it? And I think there was a moment there where it looked like it might be emerging to be closer to macro drivers. And we talked about maybe closer to trading like gold. I think the last 6 months or so have moved away from that direction. And in particular, there's a number of instances, like, for instance, with the conflict in the Middle East, like where if Bitcoin, for instance, was a hedge to geopolitical concerns, you would have expected to see it trade more closely to the incremental news related to that. I think what it has highlighted, the other side of it is it sort of reinforced my view that in a lot of ways what this is a idiosyncratic asset that is driven by whether or not there's widespread adoption. And so we have had incremental news, which you just mentioned, about a broader set of adoption possibilities, maybe is the right way to say, with the ETF dynamics emerging. And what we've seen is trade, the Grayscale Bitcoin Trust is traded, the discounts traded consistent with ETF news, the actual spot market is traded with the ETF news. And so all of that is around that adoption point. And so I think the main question as an outsider, let's say, in the Bitcoin space is really trying to get your head around what are the adoption probabilities? Because, look, if 10% of global money is put into Bitcoin and out of fiat, well, then it would be, then right now it looks cheap as all get out, right? But if the probability of success is more like 0.1%, well, then that's a different story. And so I think that's kind of that adoption question is really what's driving the market action related to it less than the macro dynamics that are going on.
Got it. So as you look at Bitcoin in a portfolio context, like longer term, it sounds like kind of what you want to see is if people are touting it as digital gold, you kind of want to see it behave like gold. That'll make you more comfortable that it has a place in a diversified portfolio.
That's right. And I think you asked a question about will institutions bring on Bitcoin. I think the question is more centered on what do they see it as an asset? What do they see it as in terms of its asset profile? Right now, it's much closer to what you'd think about with maybe like a venture growth stage investment, right? And the attributes and the volatility and the idiosyncrasy, all of those are sort of aligned with that. Lots of institutions have venture growth allocations, right? It's not 5% of their portfolio to a single asset or a single company. It's a modest allocation across a wide range of different possibilities. And I think that's basically where institutions are at. I think what you need to start to see is you need to see that those clearer macro intermarket linkages, if it's going to start to get into the public markets portfolio of institutional investors, plus the operational sides of things, although mostly I think if we can get these big financial institutions to set up their infrastructure with ETFs and stuff like that, I think that mostly takes away the operational concerns because the investors will be facing an institution, and these institutions have throughout history basically filled in the gap. If there was some issue where the assets were lost, the institution takes the hit, not the investor. And so that creates basically, it's like an insurance policy on the securities in a way that you wouldn't necessarily have as an institution otherwise. And so that is incrementally beneficial, like a free, you pay for it through the fees and stuff like that. But basically what looks like a free insurance policy does make wider spread adoption more possible from a traditional investor's perspective.
Yeah, maybe you get those incremental steps where you have the smaller investment advisors, forward thinking, get in, and then you have the bigger and bigger and bigger, and then it goes institutional. That could make sense. Now, Bob, let's move off of Bitcoin for a minute and just talk about the economy. So I'm curious to hear your current view on interest rates, because we all know that real rates are one of the biggest drivers of gold returns and hopefully down the road Bitcoin returns. Could you just help us understand the moving parts of the U.S. economy that will determine if the rate path is higher for longer, or if the current cuts that are priced in, I think there's cuts priced in starting in March, will they come true?
Well, first of all, important to recognize gold is not interest-bearing money and generally will perform more weakly when real interest rates and interest rates in general are elevated, though, gold is pressing new highs at a time when interest rates are gold was pressing new highs basically at a time when interest rates were very close to their peaks. And so it's actually performed really, really well. When it comes to the dynamics going on in the economy, in a lot of ways, we're sort of still on this path of the nominal growth in the economy is still very strong relative to what is necessary for the Fed to meet its mandate. And so measured inflation has come down. That's created a lot of expectations that there's going to be interest rate cuts immediately into the economy. For instance, very simple, which is that like 5 to 6 cuts are priced into 2024. I think that's really interesting. That's a really interesting dynamic because nominal GDP growth for the third quarter was something like 8%. I mean, that's very, very high in the U.S. economy. It's expected to grow in the 5 to 6% range for the fourth quarter. So you put that together, the economy is still too strong relative to what's necessary for the Fed to durably bring inflation down to its mandate. And so that likely means that we're going to continue to see elevated interest rates. And that slide just basically showed like what needs to happen to get us to the point where the Fed has actually brought inflation durably down to 2%. And that's a dynamic. That's a series of steps where first interest rates have to be elevated, then stocks fall, then, basically people spend less, then earnings weaken, then employment weakens, then wages weaken, and then nominal spending comes back down to the Fed's target. In that process, we're still very early, and a lot of what's happened over the course of the last 30 days basically has set us back in that process by creating a financial market easing rather than forward in that process. And so really it's important, I think a lot of people are buying bonds to try and get ahead of what might be weakness in the future. But important to recognize that order because the order is what's going to drive what happens, which is first yields have to rise, then stocks fall, then that kicks off the recessionary process. And so buying bonds today, before you get those set of steps starting to work is premature. And I think people will find that out as they have, frankly, for the last year over and over again.
Got it. Nice. That's an interesting take. Now, you mentioned in gold that, it should be a weaker time for gold, but gold is hitting highs. And there's been unseasonably strong central bank gold buying over the past year and a half. I'm just wondering, do you have an opinion on what's driving this? I mean, is it simply geopolitical tensions or are there other factors potentially?
Well, I think, in many ways, central banks are learning the challenge of having a digital asset held by a third party, right? So Chinese central bank, the Russians, and other adversarial central banks are recognizing that if you hold your bonds at custodian in a European or U.S. custodian, right, they can just take all your money away. And so what are these central banks doing? What they're doing is they're basically choosing to hold the physical asset, which they can control, rather than, which is, the gold is the physical asset for which they can control, rather than rely on a situation where they could easily have their assets confiscated. And the issue with the gold market is it just doesn't take that much. Like the amount of money stock out in the world or bonds, there's $10 trillion of reserve assets. If central banks just took a few percent of their total assets and moved it from fiat or bonds into gold, that creates a huge price pressure on the gold market. And that's essentially what we're seeing is that despite the fact that interest rates have risen, gold prices, real rates have risen 300 basis points in the last 18 months. But gold prices are basically at highs. How can that be? It's because of the demand, what do you call it? A geopolitical conflict demand, just a diversification demand. Look, central banks realize that holding the physical gold in their own vaults in their country is the safest way to protect themselves and hold reserve assets. And they're moving in that direction. And, on some sort of secular basis, central banks' holdings of gold are very, very low, a few percent. We're not talking, relative to where they have been in the past at 50%, 75%. It's not crazy to think that this trend will continue for the next few years. And I think that's interesting because the gold rally has happened at a time when there hasn't been retail demand. So imagine what you get is you start to get actually retail has been selling, like gold ETFs have been declining in AUM. Imagine you start to get the recognition that gold might be a good asset from the retail space. That could really create a heck of a squeeze on the asset on a forward-looking basis.
Incredible commentary, Bob. Now, so one question I was going to ask you is, most of this central bank buying has been from the developing world, and just wanted to get your thoughts on a bipolar world, and how much of it is FU the U.S. dollar, like just is this the way that a gold allocation relative to a more traditional mix over the last 10, 20 years?
Well, I think the basic question is, what's a storehold of wealth? And if you were China or Russia over the last 30 years, you saw dollars as your storehold of wealth. But now, as there's increasing conflict, let's say, between, the West and the East, or, the US and European and other sort of big G7 countries versus, Russia and China, they're recognizing that they may not see those as a storehold of wealth. And it's less a view, it's not really a view on the dollar, because of course this has happened during a time when the dollar on a real exchange rate basis is basically, at at 20-year highs, right? So it's not the dollar is weak or the dollar is a bad currency. I think this is the challenge as a reserve manager is there are no good opportunities, no good options other than dollars. If you're trying to save in bonds or in fiat currency, nothing else exists. Nothing's big enough, nothing's liquid enough, et cetera. And so if your choice isn't really, do I save in a different fiat currency? The question is, what do I save in that will be durable, that can't be taken away from me? And that's where they're seeing gold. That's where they see gold as an opportunity. And they're particularly enabled, the Russians and the Chinese are particularly enabled because there's actually a lot of domestic mine supply that they can pull into the market. I mean, historically, the Chinese have basically the PBOC has basically bought every ounce of domestic mine supply in the market. And now on top of it, looks like that they're also importing additional gold as well. That gives them a very easy way to basically buy into the market and suck gold out of the market without having to transact in it on an international basis.
Bob, this is fantastic. We need more time. You know what, Bob? Thank you so much. That was incredible.
Yeah,
incredible breakdown. And you know what? Gold bars in your eyes. That's tomorrow.
That's what I need. I need gold bars in my eyes. That would be perfect.
Tomorrow. All right, everyone. That was Bob Elliot. He's the founder, CEO, CIO of Unlimited Funds. I would check them out. They have a really interesting ETF. So, Bob, thanks for stopping by Hard Money.
Hey, thanks for having me.
Thank you, Bob. Harley's saying it right. When Bitcoin moon, when gold moon.
Yeah, that's when mining stock moon.
Yeah, exactly. Fantastic. Well, guys, we'll be back in a sec. We don't go anywhere. We got one of the highest quality silver names and the most levered to silver, Dolly Varden. Stay tuned. Shawn, what's up? Shawn Khunkhun, CEO of Dolly Varden Silver. Shawn, whenever we cut it up, it's always good times. Always good times.
Always the best. Great seeing you guys in Zurich, and happy to be here today.
Oh, that was actually epic. We're in this empty bar. We filmed a great interview. That's coming out. We're gonna have little clips come through in the following weeks. But that was just a good. You know what? And I still think about our time at Beaver Creek. The silver was State of the Union. Silver State of the
Union. That's right.
Could beat that one.
No,
that was fun.
That was incredible. I'll let Scott kick into it.
All right, Shawn. So Dolly Varden's one of the most successful silver explorers in North America over the past few years. I'm just curious, what are a few keys to success in your view?
I think for us, we've got a great project. We've got a phenomenal project that, I was looking at an article that I came across. One of my geologists had flagged it for me, Joaquin Marias. It was an article that was written in 1921. And if you go back, this area goes back to 1904, 1905. The Dolly Varden silver mine went into production in 1919. In 1921, this article was highlighting a new discovery. And the new discovery was something called the Torbert mine, which became Canada's third largest silver mine, and it produced for the entire decade of the 1950s. The reason I bring this up is with some of the new discoveries we're making, whether it's at Wolf or up at Homestake Ridge, it just reminds me of that article that was written 102 years ago that highlighted that further discoveries can be made. And here we are 100 years later, finding more. So I think we've got a phenomenal project. I am blessed to have put together a great team of scientists and explorers. We've got what you need, which is great financial backers. We've got Hecla Mining as a 15% shareholder that has been a phenomenal backer, as has Eric Sprott and other institutional investors. So if you have the money, the team, and the project, that equals North America's most exciting precious metal story.
Now, before we get into specifics of what you're going for, your exploration, I wanted to touch on Hecla's stake. So they're the largest silver miner in North America, and they've had a stake in you guys for a long time, and they just upped it by 50%. Should we take this as a vote of confidence in your recent exploration success?
So look, one of the things I want to highlight is, continuity, history. Hecla is one of the oldest listings on the New York Stock Exchange. I don't know the exact year, but I think they were established in and around 1890. The company is over 130 years old. How do you run a business for that long? Think about all the changes we've seen in the world, all the changes we've seen in mining and technology. And this company is one of the fastest growing established silver producers in the world. And so they've got a CEO that's been at the helm for over 2 decades. You talk about continuity, you talk about establishment of a company and a C-suite. I don't even remember the question, but
is it a vote of confidence? Are you guys?
Yeah, they obviously saw something they liked, right? To be upping their stake like that. You were starstruck by Hecla. I understand. They're an impressive company.
Into like the royal family here. I'm like, hey, now just Greg Poupon's getting served. These guys are like, you're sitting on those fancy couches with that red velvet. I know the life, man. I dream of that kind of life, man.
Well, listen.
That's a Hecla kind of life.
I'm working for the other 85% of the shareholders, and their vote of confidence is, if you look at the way the stock has traded, you look at the way the company has appreciated over the last years, it's a vote of confidence, but it was also a vote of confidence from Eric Sprott. It was also a vote of confidence from all the institutional investors, from all the high net worth investors, for all the mom and pop investors. So yeah, I think people are celebrating the fact that getting a primary silver mine is rare. And finding it in a jurisdiction where you can take comfort, I always ask myself, when I'm looking at mining opportunities, is this a place that I'd bring my family? And I've brought my family up north, right? And I live here. So it's, I think that's what makes this so special. And that's the big validation. It's the Nishka, it's the BC government, and it's the prospectivity.
Great. Now let's look at your target map for a second. I'll pull this up while you're talking to it. Of the discoveries and targets on this map, which ones are you focused on now, and which will move the needle the most for your ounces if they are a success in your view?
We've had interviews in the past where you guys have asked me about connecting deposits. The bulk of the ounces are at Homestake, Maine, and at Torbrit. And what we've really celebrated over the last 12 months is this exciting new discovery, Wolf, where it looks like we're on to the next Torbrit. But the bigger question is, are any of these deposits, can they be reinterpreted? Is there a relationship? Are some of these deposits that have been seen as two, separate deposits, is there a link? And, my history in mineral exploration, development, and production over the last 20 years has taught me that when you have two systems meeting, you can have some blowout grades. And so in addition to, I have to talk about Wolf, because Wolf is where we're adding, in my opinion, tens of millions of ounces of high grade pure silver. But if we go up to Homestake, my vice president of exploration, Rob Van Egmond, who's a legend. Rob came up to the Golden Triangle at a time where the Golden Triangle was in its infancy, at a time where there had only been 5 million ounces of gold discovered, despite the area first, getting recognition by prospectors in 1864. But up until the 80s, there was only 5 million ounces discovered. Since then, since 1989, we've added 150 million ounces of discovery. So Rob Van Egmond, our VPX, and I don't want to date him here because he's very young, he's very youthful.
Spring chicken.
He went up there in the late 80s, early 90s, and he was up there at the time of Eskay Creek and worked up at Snip. And the reason I mention all this is Rob has come on this project, and he's been here for about 6 years. He predates me at Dolly Varden, and he was one of the only people that we retained from the old Dolly Varden. And I'm so glad we did, because this guy has been the MVP of Dolly Varden over the last 3 years that I've been here. Long story short, Rob has looked at Homestake Maine and Homestake Silver, and the question he's asked himself is this one system. And we've drilled some holes into the middle, trying to extend and expand these zones. And I'm hoping that when we release results, we can validate Rob's theory that this is one area. So to answer your question, I'm really excited about Wolf, but I'm dreaming, I'm hoping that his theory pans out and that up at Homestake, we're onto a really, really, really big, juicy precious metal system. And we can show that these are two connected.
That's great. That's really helpful. Now, you're drilling over 50,000 meters this year. So I'm just curious, at the current pace, can you give a rough timeline and when you would expect assay results from those property scale targets? I'll put up a chart that has some white stars that is a helpful chart. Just curious when you think those are going to come in over time, backdated later in the year. What are you thinking?
We were reporting into February last year based on the 37,000 meters we drilled last year. We drilled about 37,500. We drilled more this year. Assay lab times have actually been better this year, which is really important because one of the biggest challenges in our industry is the science has been slowed by assay times. And thankfully this year with less activity, we've been in a bear market for a decade. We're one of the few examples of a company that's actually growing and doing more. But to answer your question, I'm hoping that by the end of January, so within the next 60 days, that we've got 70 drill holes, the remainder of the 51,000 meter drill program announced, released, assayed, and put out with some context of what it means. And most importantly, where we're going next, because, we've got a healthy treasury. We've got shareholders that want to continue to keep funding this project and continuing advancing it because it's been very accretive. We started as a 20-cent stock, a $20 million idea. We're busting up against a $300 million valuation now. And if I have anything to do with it, I'd like to see this company get up to $1 billion valuation, because that's where I think the potential of the prospectivity of this area is. And not to mention, we're on the verge of a precious metals breakout. And there's been 2 times in the last 20 years that I've been adamant. And it was September of 2022 and September of 2023, where I was literally banging my fist on the table saying, this is go time. And that was before the move. We are at the goal line right now, right? And depending on which way the wind's blowing, like this could start tomorrow.
Well, we were at this when we were in Beaver Creek. When you banged your hand on the table, there was a crowd, a rapturous crowd behind us. We couldn't even we had to pause. The crowd was going bananas. You had to see it to believe it. I felt like I was at Fenway Park or something.
So I guess
someone cranked a grand slam.
Did they slowly walk out and they started buying? They started accumulating, and here we are.
Oh man, Shawn. So we are truly in it. Like it feels like we have. And you do the math for me again. I thought, the way you talk about the leverage is very clear that we're in a place for a breakout right now. The miners don't act like it. The valuations are so cheap across the board. It feels like, we love these trades where if the first move has happened in, the metal, you've got a second chance because the metal's already there. Why not buy the thing that's on sale, and deeply so?
So because I've been hanging around this business for 20 years, and we've been in a bear market, I've gotten to know the legends. And I was with one of the legends in the business, Frank Justra, and I was having dinner with him a couple of weeks ago. And he said something to me that I think highlights, articulates, and I think every investor could understand and appreciate something from this. So I said to him, Frank, you've been around, you're a legend, you're one of the top 5 mining investors on the planet. How bad is it today? How bad is the environment today? And he said, it's pretty bad. He goes, it's probably one of the worst I've ever seen. He said there was a period in the late 90s, post Bre-X, 97 to 2000, where it was this bad. But then there was a little sparkle in his eye. and he said, and I leaned in and I listened, and he said, the difference though is central banks were selling, gold had a $200 handle on it. And he goes, this time the equities are, priced, for the end of the world, just like they were in 97, 98, 99. But the difference is the commodity prices, and we were talking specifically about precious metals, specifically about gold, are at all-time highs. And so his confidence, and you see how active he is, right? And Frank is a guy that has come around, and written papers in 2000 and come back around in 2000s. His timing is impeccable, and he's built some of the biggest mining companies in the world, including Goldcorp. When he started Goldcorp, it was a nothing cap, and it went to $50 billion in creative deals like Wheaton Precious Metals. And so I guess my point here is the biggest difference right now is the metal prices, as you said, are telling us something, right? And they're leading, and I think the stocks are going to snap. And this reminds me, and I've said it before, this, for me, in the 20 years I've been doing this reminds me of 2005. Like, this is December 2005. And fast forward to what happened in May of 2006, and it was spectacular. And it wouldn't surprise me. Like, I am mentally conditioned and prepared for gold to go to a new nominal high in US dollars and for the stocks still to lag, just like they did in the spring of 2006. And what you need a meaningful breakout, and then watch out, because there is, if you took the entire industry, and it wouldn't even equate to, one of the big, tech stocks, that pick one, Alphabet, Apple. So I think we're in a tremendous environment right now, and tremendous opportunity. And at the end of the day, for precious metals, look, they get consumed. You look at silver. The reason I've put all my energy and my time and my focus into silver is there is a shortage. There's a massive shortage. And I'm looking at silver right now at an 80-to-1 ratio. And I will go on record here, okay? In the next 18 months, we will see that ratio down to 30-to-1. Wow. We will see that. And when it does happen, like if gold stays flat, and it's not going to stay flat. You look at October, you look at the month of October, we've had in yen, in euros, and in pounds, these are major global currencies, all-time monthly highs, right? And we're about to put one in dollars, right? So the leader's going to put one in. And so I am, as you can probably tell, I'm excited because I've been living in a bear market for the last decade, but that's the time to build a business. If you look at the best companies were built in the 1920s, and that's where you build value. That's how you create wealth for your shareholders. And then, as we move into this next leg here, it's going to be incredible. And it's exciting. And we've already seen it at Dolly Varden. I don't want to monopolize your airtime here, but we've already seen a price per ounce grow from about 40 cents to about $1 during the bear. But the next leg will take us to $2, $3, $4, $5 per ounce in the ground. And if I can grow those ounces, and we've added about 100 million ounces of silver equivalent, so it's a multiplier effect. And that's how you build a company from 20 million to 300. And if we keep going, and we keep having success, it's going to go higher. It's going to go to $1 billion.
Shawn, that was a phenomenal story about Frank, and like just this disconnect, which should give all precious metals equity investors extra confidence that the bets they're taking. But one thing you stated, and it really struck out at me, is that your best defense as an explorer is to keep putting points on the board, right? Like that's how you can grow in bear markets, bull markets. It's like it's adding those ounces. It's well done.
Yeah, and I'm correct in saying that Shane Williams is coming on today.
Yes, yeah. Right next.
So there's a company there where I sat down with Frank and I said, hey, let's build an Ontario focused gold company. Let's put 10 million ounces in inventory. Let's build. And again, when do you build these things? You build them at the bottom of the market. You build them when nobody cares. And there's an example of a company that started at a $4 million valuation. I think it's about 100 today. And we've got a guy in Shane Williams. And this is the special part about Shane. I've been going to mining conferences for the last 20 years all over the world. Finding a mine builder is like finding Waldo. Like impossible, right? And then when you do find Waldo, he's like 96 years old and like he's falling asleep and like
doesn't say too well.
Shane's a guy that's built 3, not 1, not 2, but 3 mines. I don't think Shane's even 50 years old. We've got a guy here. I've never seen anybody work so hard as a CEO. He's got a tremendous platform. He's got a mill, a permit, 3 million ounces in resource. So we're 30% of the way to our vision. And he's got a phenomenal company. And it's, Frank's a plus 10% shareholder. There's some other incredible shareholders in there and, high grade. And I'll tell you, going back to Red Lake and Gold Corp and the high grade zone, and this is where, I cut my teeth and I learned this business. Shane's got a target there called the 8 zone that is a lookalike. So he could have the next Gold Corp.
Incredible.
Shawn, I hope this whet everyone's appetite to talk to our next guest, but we got to thank Shawn first
Shawn,
for coming on.
Thank you, man. It was such great insights, as always. We got to do a holidays Twitter Spaces or something, man. Some eggnog.
Can we do it on the beach somewhere in the Caribbean?
Of course. I know you're going to be on one of these fancy velvety chairs at
Echo's going to be feeding him some caviar.
I'm going to be eating a Big Mac on the beach. Shawn, thank you very much. That's Shawn Khunkhun, CEO of Dolly Varden. Always good time. Shawn, brother, thank you.
Take care. Thanks so much, guys. Have a great day.
Thank you. Oh, man, incredible conversation. Don't go anywhere. We've got
West Red Lake Gold, the CEO, Shane Williams, coming up next.
got Shane Williams from West Red Lake Gold Mine. Shane, CEO, how are you, man?
I'm good, Thomas. I love the show. I love the format, guys. It's my favorite show. So,
Oh, I know, right?
Words.
Listen, man, I want this on your app, sitting on your, we should create a little app for the phone where, you just pop it in, you watch. Shane, listen, what an intro. It's nice that we got Shawn to do the intro for you, man. 3 mines, under 50, a triathlete. What can't you do? You need...
Yeah, I mean, Shawn I was watching a little bit of Shawn. He's done all the work for me, man.
No, he's making it easy on you.
He's making it easy on me.
It just whet my appetite.
Yeah, and Shawn is so slick. He does it so well. I'm not as slick as Shawn, but he does it well, man. He does it well.
Yeah, he's one of the best.
We always got to do it back to back now. We got to have Shawn, and then, you know what I mean? It's just, now you just can do the victory laps. But let's kick right into it.
So what's interesting about West Red Lake Golds is that you've chosen to buy a heavily discounted, recently producing mine instead of just focusing on wildcat exploration like many others. So I'm wondering, why do you believe this is the most profitable path forward?
Yeah, they're excellent questions and really to the heart of West Red Lake. Look, as Shawn mentioned, I've been in the business for 25 years, building, operating, constructing mines. From an early stage mine all the way through to, a full operation can take 10 to 15 years of construction. It's a long slog, right? It's a long slog. It takes time. It takes effort. You got to get permitting and everything. And parallel to that, as you get these cycles. You get the gold cycles. You get these commodity cycles. So it's very difficult to get both of those together right. You got to spend 10 years building a mine, and you got to get the cycle to be right. Sometimes you miss a cycle and do the second cycle. And so with West Red Lake, when we put it together, we wanted the two of them together. We wanted to try and get the cycle at the timing, which is important, and have an asset that can go quickly into production. So I think we've got the perfect combination now, the perfect setup for an asset that we got very, very cheap, ready to go into production, just as that gold price is beginning to come. And, Frank Juster is a big shareholder, and he's been through a number of these, and he is very good at timing. Frank always gets timing right, and we see this timing as very similar today. To get that leverage, to get that really leverage to gold price, we don't have to wait a number of years to get into production. We're ready to go, really, and that's why we chose West Red Lake and went on that story.
And Shane, remind me of the math, because it's kind of like, it seems so incredible, the math on the deal that you guys got. The audience needs to hear that.
Yeah, well, there's a very famous investor, Warren Buffett, and his analogy is to buy when there's blood in the streets. When sentiment is down, Frank has done this a few times. Look, I mean, this asset has had over $350 million of infrastructure spent on it. It has a brand new mill. It has tailings facilities, underground development. It has a lot of infrastructure. And like I said, I've been doing this for 20 years. It takes a lot of work to get that infrastructure in place. It takes a huge amount of effort. It takes a lot of time. You've had a lot of big mines over the last 6 months, 8 months, getting inflationary pressures, getting into trouble, permitting issues. We have all that in place. And also, we picked up a lot of tax losses associated with it. So really, pennies on the dollar, I would say, from an investment.
Yeah, it certainly looks that way. Now, I'm curious what improvements will be key to making sure a mine restart is profitable and goes smoothly from your point of view.
Yeah, look, the primary focus is to de-risk the asset. The previous operators had some issues. They also had COVID. They had a lot of headwinds against them as they tried to put this into production. And one of the issues we picked up was the de-risking of the resource. We've quite a bit of work to do on the resource. So that's getting it on the ground, drilling, getting that confidence of the ore body, getting a confidence on the mine plan. And when that's done, really, it's time to then look at and restart planning, for the future and the new start. So yeah, a lot of de-risking. We've got to give that confidence back to the market that, hey, we've brought in a perfect team. We've got a perfect team in place. We've some key board members, Duncan, Tony, these guys have built big companies over a number of years. We've got some good backers behind us. Frank Justra, Shawn is an advisor to myself. We've got a good team, and with the team and the de-risking of the resource, we've got the perfect storm, I believe, for investors to come along for that ride.
Great. Now, Shane, I know your company is cashed up with the recent 13 million raise, and you also have large backers. Frank Juster, as you mentioned, Sprott is in there as well. So my question is twofold here. What are your highest spending priorities at West Red Lake? And then also, do you think deep-pocketed supportive backers give you an advantage in the mining business?
Yeah, excellent questions. Look, you guys know that the markets have been pretty poor over the last 6 months. It's struggled to get money. We were together, Thomas, at Beaver Creek. The sentiment was pretty poor. Look, we as a team have raised close to $50 million in the last 9 months. There's very few juniors out there, developers, explorers who have done that. So, that's a part of the quality of the team we've put together. It's also a part of, Frank's backing, and also people see the Gold Corp analogy set up. So, yeah, we've been really lucky. We've had some good backers, strong backers, and we've managed to get good money from good, strong shareholders who are going to be there for the long term, very long term.
Yeah, it's very, very important in the mining industry, right? There's a lot of projects with potential, and they never raise the money, and so that's where it ends.
Yeah, that's key. One of the challenges is always in early stages, getting that money, getting out there, doing the rounds of the conferences, hustling for that money. But I think one of the keys for us is, with the team, with the backers we have, as I said, we were down in Beaver Creek. Everybody was around doing the one-to-one. Frank was with me. We were walking around. Everyone comes to us. People are queuing up to give us money. They want to be part of the story. They see the opportunity. They see the setup. Shawn talked about the setup for gold, the macro. They see us quickly getting into production and getting that leverage. And look, West Red Lake, Matson Mine won't be our only goal. I would say over the next number of years, the objective is to build a mid-tier gold mining company. And so with the backers we have, the history we have, the track record of the team, that is something that's very, very achievable. So yeah, people are lining up to give us money.
Wow, good spot to be in.
Well, Shane, one thing is a testament. Like you guys are stated ambitious goals, right? And I think that's the most impressive part about this is this idea to become a mid. Like we haven't seen this in ages, right? Like there's nobody they set out and say, listen, I'm gonna build the next big mid-tier gold miner, right? Like out of Canada.
Yeah. Look, and my background is building operating mines. I'm not a guy who, junior mining, drill and do exploration and do that. Look, my goal is to build a mid-tier Canadian miner. I've done that for a number of companies. We have the team, Tony, Duncan, Hugh have all been part of big companies. And so we built a board, we built a team that can go for the long run. We're in it for the long run. We're not short-term investors. We're all in it for the next 5 to 7 years to build this mid-tier company. And we've assembled a young team. Like I said, I'm under 50 years of age. I'm here for the long term. I'm most of the compatriots at that age range. They're not in these roles. You need a young, hungry team. It takes time. It takes time and effort and a lot of work. And so we've assembled that team, but also having the background of the board who can give that mentoring and guiding. They've done that. So that's a perfect setup. I would say out there, there's very few teams that could compete with us as a sort of a structure to get a gold company built.
We need that young blood in mining, man. Which is really it's always struck out at, like West Red Lake in terms of the energy that you guys have. It brings this. If there's an opportunity for us to convince a new generation of what the value of mining in the industry itself, West Red Lake's going to be part of leading that charge.
Yeah, we're going to be the apple of mining, Thomas. We're going to get the apple. I want to get the young people interested. I want to get them back into mining. I've had a great career, 25 years around the world, lived all over the world, built mines. This is exciting. Mining is exciting. It's energetic. People should be joining mining. They can see the world. They can get involved. They can build communities, build projects, build value. This is the sort of thing we want. And I'm trying to get those young people into mining. I'm going to become the Steve Jobs of the mining industry.
Yeah, that's right. That's right.
Love it.
But like, and that's the beauty of mining. You get to see the world, like truly get to see the world, right? You know, it's like, you know, it's the furthest thing from a widget factory. You know, like you're in this world, seeing, you know, all of the geological formations and taking the good stuff out and propelling humanity.
And you're working with people. Part of it is you're working with teams to build value in local communities. You know, I mean, a lot of good value, mining gets a bad rap. You know, it does get a bad rap from young people, but, you know, I think it's a fantastic industry. You get out there, you work with people, you build value, you help communities, you know, you see something grow, you build real value, and you're part of a team. And you know, that's something fantastic.
Fantastic, Shane. Now, just, you know, before we end, I have to ask you, as West Red Lake Gold investors or prospective investors, how should they view the next, 6 to 12 months? Catalyst rich. Obviously, you have a mill ready to go. To talk to us about how we see the next year. Yeah, look, the deal is only closed in June, Thomas. Really, so we're just getting going. We're getting underground now. We've had some spectacular results drilling underground recently from our Matson project, and look, I see that going forward now. We're going to have some spectacular results. I'm really excited. It's like a jewelry box down there. It's like a jewelry box of opportunity, really, and we have a team who really understand that deposit. So on Matson, a lot of drill results coming. We're going to put together a study then, a study and PEA study first quarter next year. I think people will look at that. We're going to incorporate our Rowan property. People will look at that hub and spoke model we're trying to build. People look at that and go, wow. They'll be very surprised by the value. Remember, all the capital is already there. It's sunk costs, and we have the tax losses. So when you put those together with the sort of grade we have, you'll have a fantastic project to be able to put forward to the markets. And the market will wake up. I am sure the market will go, wow. And that's where we'll get huge leverage, There's very little companies today who can be in production in 12 to 15 months with that sort of value, and with the gold price moving, and with a team in place, and with all that, with all that capital, and with all that energy, man. That's right. You get it all. And Shane, always a pleasure. Listen, we got to do a Twitter Spaces. I told Shawn we're going to do a holiday, Christmas Twitter Spaces, some eggnog. Yeah, I can dress up. I can put on a Santa hat. Somehow I get stuck on the beach with a Big Mac. We got to get those young people into mining. There's a lot, critical metals. Metal is the future, man. Metal is the oil of the future. And the more people we can get in there, the more energy we get. And I'm hoping West Red Lake, people go and join us and go, wow. And they've been part of the story. And that's our objective. Well, that's it. And if you think about it, right, think about like the Apple of mining, and like we just need a fraction of that market, just a fraction. Give us a little sliver. That would send the entire space to the moon. Yeah. If you get a little bit of some of that energy coming in and some of that money, it'll be like a funnel. You get a funnel of some of that money coming in, it'll juice, man. It'll juice the companies. And then the cream will really rise to the top. The likes of ourselves, people will look for the cream, and we're definitely the cream. We are of the mining space. Shane, thank you so much. Always a pleasure. Great seeing you in Zurich. The Beaver Creek was phenomenal. Until we do it next time, hopefully it's before PDAC, but if not, we'll definitely do the Twitter Spaces. Shane, thank you so much.
That was Shane Williams. He's CEO of West Red Lake Gold Mines.
Thank you very much, guys. I love being on. Perfect.
Thank you.
Great. All right, everyone, don't go anywhere. The hard money train keeps going. We have another gold miner coming up who's operating in Argentina, where they just had some big political changes going on. So we're going to ask him about it.
Tailwinds galore.
Yep. Don't go anywhere. Welcome back, everyone. We're joined by Mark Brennan. He's president and CEO of Cerrado Gold. Welcome, Mark.
Hey, welcome, guys. Nice to talk to you.
Mark.
All right, Mark, we got to kick it off. I want you to tell people about Cerrado Gold. You got a lot of interesting things going on. Can you just talk about your 3 projects? There's 1 producing and 2 being developed.
Sure. I guess in Argentina, we've grown our production probably about 300% in the last 3 years, taking it from 20,000 ounces to 54,000 ounces last year. We're seeing costs coming down dramatically. What's also very nice is actually we're one of the lowest cost producers in Argentina, even though we're one of the smaller companies in Argentina. So I think it speaks a great testament to the technical job that our team are doing down there. As you mentioned in a little bit of the preview, basically we're seeing some really significant political change taking place. We have a new president coming in on December 10th. He's already shaking things up very dramatically. As you guys are probably well aware, we've had the currency controls.
Shake up would be an understatement there, Mark.
Yeah. No, like this guy's got a chainsaw, right? And he's taking it to the bit. So and the good thing is the Argentinian people, they brought him in with a really solid mandate. They're prepared to take the pain. They recognize that the previous governments have been way too profligate with spending. So they're, it's looking really good. I think it's going to make assets worth a lot more value. It's going to make the peso be a lot more valuable, and it's going to bring a lot of new investors into Argentina, which is fantastic.
So do you think this could really supercharge things for the whole Argentinian mining industry?
I think so. We've worked over the course of the last 2 or 3 PDACs by bringing in the governor from the state of Santa Cruz, and when we go and see everybody, she's saying, how can we endorse? How can we bring more investment into Argentina? And everybody says, you know what? Get rid of currency controls. Get rid of a lot of the policies that you have in place of profligate spending, and people will come. And that's what this guy's going to do. So I think that we're seeing a shakeup already. He doesn't come into the hot seat until the 10th of December, but he's already shaking things up. The actual dollar is falling against the peso already, and so you're going to see some starting day one. He's going to be working hard and making some very significant policy changes. And there's a lot of companies who've kind of looked and they've announced that they're ready to come into Argentina. You just got to see changes, and those changes are taking place.
And Mark, you guys are already one of the lowest cost operators in the country, right?
We are. I mean, we bought into Argentina in March of 2020. 2 days before COVID was struck. So we've had a tough 2 or 3 years in terms of getting the COVID protocols, to play into our mining operations. But the team, as I say, they've grown their production from when we acquired it at 22,000 ounces, now up to 55,000 ounces. So really strong growth, costs coming down. And we see lots of new, we've just embarked on 2 new initiatives there, a heap leach operation, as well as a new open pit area with grades of 10 to 12 grams. So we've invested $35 million into Argentina. The reality is that money is now coming, that investment is now looking to reap some rewards in terms of production. So we're looking at strong production profile growth and things to move much better on a micro level. But combined with the macro level, it's going to supercharge our profitability. Right now there's a mining dollar in place that basically is 50% the official rate, 50% the CCL or the blue dollar rate. The official rate runs at around 350. The CCL rate, is now running around 900. So what that means is that just that initial change to bring in, 50% of the CCL rate into our revenue stream is going to reduce our cost by 30%. Wow. So all of a sudden, these new policies that are coming in are really going to supercharge the benefits of mining companies and oil and gas companies and anybody who's exporting. So it's a really, really good thing for Argentina.
Now, Mark, you have a really good slide in your deck that I wanted everyone to look at, and maybe you can talk to it. So you built projects before, and that resource estimates can change significantly and grow over time. Is there still exploration potential at both of your projects as you continue to develop and produce them both?
Yeah, I mean, if I look at Argentina, I still, when I speak to people, it's still a startup. We have yet to get to the point where, unlike most startups, they don't have production. We have 50,000 ounces of production where we should generate. Last year, we generated 22 million of EBITDA. We reinvested 38 million. The reality is that this year, we expect it to surpass the cash flow that we generated last year. So as a startup, we're still very young. We don't know quite who we are going to be when we grow up. We're working on the open pit strategy right now. We've just introduced the heap leach. The heap leach operation should add another 25 to 30,000 ounces per year at $1,000 all-in cost. So from that perspective, if you look at other groups in the belt, whether looking at Cerro Vanguardia, that's produced about 8 million ounces to date, they started going the route of open pit, and then they went to heap leach and then underground. But if you look at Cerro Negro by Newmont, they went directly to underground predominantly. So we haven't even started the underground trip yet, and we did make an application in the summer for underground permitting, and we hope to get that sometime in the near future. But we are a cash flow startup operation in Argentina, and there's ample opportunity to find new resources throughout our property. There's gold everywhere. It generally tends to be, it's a classic epithermal low sulfidation system, very similar to Nevada. They've discovered 35 million ounces plus in this belt since its inception in 1990. So it's a brand new belt in essence. So it's very, very prolific, and we expect to see a lot more ounces coming into it.
Great. Now, so you're producing, you have cash flow in Argentina, and now you're developing a pretty exciting project in Brazil. So I wanted to move to that a little bit. You released the feasibility study for Brazil. It showed that you're going to generate more than 13 times your current market cap and free cash flow over the 9 years of the project, which is a little crazy. So obviously, it's going to be a game changer for the stock once you get the project funded. So can you walk us through the plan to fund the 190 million upfront capex, especially the equity part?
Before I gotta interject. I have to interject. If you want to see where deep value lies, it's in that figure right
here
there.
13 times.
13 times. Incredible.
Unfortunately, that's the market that we're living in today. And the reality is that, to my knowledge, I've gone out and I've looked around South America to find equivalent assets around that 100,000 ounce production level. And I don't see anything that is too close, to be honest with you. There may be a handful, but no more. And I'd love to hear of any assets that are similar. That said, this is still a discovery asset as well. Remember, what we did is we made a plan. We got to 1.3 million ounces on a global basis, and we decided, okay, we're going to take this into production to drive cash flows, which will drive further exploration. So what we're looking at is that we're well on the path with the feasibility completed. We filed our construction permit in September. We expect to get that. We were hoping by end of the year, but probably January, February kind of timeframe. On top of that, what we're looking at is the funding, as you mentioned. We have a very unique structure in place for our funding. If hypothetically we're looking at say 220 million of funding, capex was 185 million. We had some working capital. We're going to add $10 million for exploration drilling during the construction period. And basically what we're looking at is we've got the UK government, their UCAF Export Credit Agency, agreeing to provide us up to $190 million of project funding for 70% of our capital requirements. So what we're looking at on that front is, say we need $220 million, $160 million of that will come through this UK Export Credit Facility. We've already announced that Sprott have an interest in providing a royalty of approximately $50 million. It means, coming into the third quarter of next year, our equity need to bring this mine into production will be $20-30 million max. That'll generate, at today's prices, somewhere close to $130 million a year of cash flow. At $1,750, it generates about $85 million a year of cash flow. I mean, the numbers are astronomical of what we can do here with the potential that we have here. So to your point of being so heavily discounted, unfortunately, it's the market we're living in. This is not specific to ourselves, unfortunately. But hopefully, these gold prices moving up now to 2040 is starting to shake up things a little bit. We're seeing a little bit more activity coming in the market. So we just have to be patient and keep pushing things forward.
precious metals is clearly the one of the lone areas where you're seeing deep value disconnected with the underlying commodity. It's just a matter of time, and I'm a believer that it will be a rubber band as opposed to a slow grind higher. It'll be when it happens, it happens.
Yeah, no, indeed. And it'll happen, as we all know, as someone, I was watching Rob yesterday, this is a very cyclical industry. It can turn on a dime. Sentiment can turn very, very rapidly. We saw a little bit of a bond route yesterday on the basis that, rates are coming down. I think people think that rates are coming down in the short term. And I think that'll get people more diverse into different asset classes. And I think the mining sector and commodities is certainly an area ripe for growth.
Yeah, exactly. Now, could you just walk us through the remaining operational and permitting milestones? You have a good chart that you show in your deck that kind of lays that all out. And this is related to the planned production startup in Brazil.
Yeah, I mean, we already have the preliminary license that we received in the second quarter. As I mentioned, the construction license we applied for in September. And we had expected that to be the governor of the state of Tocantins was hoping that he could deliver that to us by the end of the year. It seems like we're caught up a little bit in some bureaucracy, but nothing that we're concerned about. And again, I expect in the next couple of months, in the first couple of months of the new year, that we'll get that construction license. From there, we're working on our project funding, and we hope to have that wrapped up by the end of Q2, and then from there we're in full on construction mode. Now, just so you know, I mean, we will start clearing as soon as we start getting the construction permit, which would be in the first quarter. So the preliminary components of construction will start earlier.
Okay.
Mark, phenomenal. Now we're going to bring up one last slide, which is talking about this valuation discount and your growth over the coming, I want to say 3 years. Let's put that graph up there, and maybe you can talk through just how you guys your production growth versus peers, and then also the valuation. I'll bring that slide up.
I'm not sure we have that.
We don't have the slide. Sorry about that.
Let's have him talk to it. Actually.
Talk through it.
More important.
No worries. I mean, I think
my question was, so as you look at your upcoming catalysts, obviously the market could help you close that gap. But what do you think of upcoming catalysts would be most likely to really close the gap? Obviously, when cash flow is coming in, that's obviously going to do it.
Yeah, no, I mean, that'll be the final hurdle, I think. But before that, I mean, I think construction permit for a lot of people, that's important. There's been, and so that's coming very soon. Again, I think even before that, probably in the coming couple of weeks, we will announce a major international bank that's going to provide us with the lead arrangement for the UKEF funding facility. These guys don't get involved for no reason. All their fees are paid on success. The reality is that they believe this is going to happen, as do we. So that'll be a big milestone. Again, moving into the completion of the due diligence for the funding, I think will be a big milestone. Basically, as we've just completed a feasibility study, they'll have lots of raw data to have, which is good current data, which means the diligence process shouldn't be that extensive. There'll be some diligence on the ESG side because it's a government orientated facility. And on that basis, I could see 2 or 3 months of diligence, which could prolong it to that end of the first quarter kind of timeframe. But subsequent to the end of the first quarter, we get down to paperwork and documentation, and that's when I think people will see that this is a very real transaction that's occurring.
Yeah, it makes a lot of sense. I mean, once you have the funding lined up, then this more than 1 times your market cap in free cash flow is coming in less than 2 years from there. So that's
the cost of that is going to be, again, $20 to $30 million. I mean, it's not a lot of money compared to the cash flow that we're going to generate. But I'll also remind you, we're seeing lots of interest in terms of Argentina. So we'll see some very significant, macro pictures that are going to drive substantial value. I could see our operations in Argentina having costs reduced by 30%. And again, if you look at how we generated $22 million of cash flow last year, we have a growing production profile in Argentina. Reduce the cost by 30% from what we saw last year, and the numbers are going to be pretty strong. So I think as we start publishing numbers, for the first quarter, second quarter of next year, things are going to be very, very positive, as well as the fact that you're going to start to see, in my belief, you're going to start to see a lot of new mining companies moving into Argentina. And so that'll ratchet up the value that mining companies are given in Argentina. I'll also just mention with our project in Quebec, the iron ore project, we're starting to see quite a bit of interest in that project as well. Iron ore prices remain very, very high at $125. This is a low cost, high value, highly green component for the steel industry, producing 65% plus iron ore. So from that perspective, we're starting to get a lot of interest in that project, which hopefully we'll see some milestones coming there as well.
Mark, you're a true Renaissance mining man. I've noticed that now. You'll go anywhere. It doesn't matter necessarily the metal, because you just are looking at the economics and you want to build profitable projects. So hats off to you.
Our God is cash flow, and I think if we can get the once we get the Brazil and Argentina, and Quebec assets up and going with very limited new equity required, the reality is I think we can see ourselves generating $500 million of cash flow excluding Argentina. So the numbers are there. We just have to get that story moving along.
I got to give it a final quote. This is from YouTube, Baz Hallworth. I like Cerrado. This guy's built some other companies before and got them sold, so hoping he'll do the same here in RG.
Well,
Mark,
thank you.
We'll see you on a Twitter Spaces soon enough. Thank you so much, and we'll be back. Thank you, Mark.
Yeah,
love you guys. Thank you, man. Really good. All the best. Thank you, guys.
Thank you.
Take care. All right, everyone, don't go anywhere. We have another silver producer coming up, CEO there, and he's exploring in the U.S. some very underexplored, kind of doing things a bit different. So we'll hear from him in a minute.
Summa Silver. Galen, oh man, you dressed up real nice for us. I like that.
We don't deserve it.
Yeah. Well, you guys are looking.
We should have had you front of the conference.
Well.
This is that kind of black tie event I was trying to go for with this conference. And people showed up in their PJs in the morning.
Well, hey, I'm on camera. But hey, guys, I'm actually at
equity raise coming. This is like lots of money coming into the company. It's success. You're just breathing it.
Yeah, that's it. Thank you. Well, I tell you, I'm at a gold conference, a precious metals conference in Zurich right now. So hence the suit. I just got finished with that because it's evening here. But sentiment has changed, guys. I think we're in a new market.
Really? Yeah, it certainly feels like that from the conversations we're having.
Yeah,
now, Galen,
well, good to hear that on your end as well.
Yeah. So I've heard you speak before, and you do a great job explaining your overall exploration strategy. Can you break it down quickly for us? The geographies you target, the data you're looking for before exploring a claim, kind of that type of stuff.
Yeah, so let me start really high level. Number one, we're operating and exploring in the United States for silver. A little bit different from a jurisdictional risk than places like, say, Mexico, Peru, or Chile, which are 3 of the top 5 silver producers. And not to say that there's anything wrong with exploring there at all. I'm a shareholder of companies that work there, but finding good high-grade silver assets in the United States is a unique part of our story. And for us, where we're concentrating on the flavor of the projects that we work on, we have 2. One's in Nevada, one's in New Mexico. But we dig into these historic, high-grade, past-producing districts that were prolific producers of silver in their day, and even really shaped the early days of the American West, but haven't seen much or any modern exploration. And hey, like it'll become obvious I'm a geologist if you haven't figured it out already. But there's an old saying, and that's the best place to find a new mine is next to an old mine. And we get to go into these districts, and the search space is very open. They're very underexplored, no modern methods. And have made some very interesting, both new discoveries, but confirmation that there's still a lot of juice left to squeeze in these places. So this is a good slide that you're showing here, guys. And district comparison. If you could throw that back up, I can just speak to it really
Yeah, let's
briefly.
bring it back up.
Yeah, great. There it is. So our project in Tonopah, Nevada, we have the eastern half of the Tonopah Mining District and its exploration extensions, which we are now making new discoveries on. This was a place that was the second largest historic silver producer in Nevada, second only to the famous Comstock lode. And as the saying goes, the Comstock made Nevada a state and Tonopah kept it a state. So upper half of this slide, Tonopah, it's the first row there, produced over a mined length of 4 kilometers and 175 million ounces of silver. But how does that compare to some of the famous Mexican districts that the Spanish have been mining going back like 500 years, and probably the indigenous people before that? Well, look at Guanajuato, Sandy Mas, Pachuca, much more strike length, 18 kilometers and 7.5 kilometers. And then, of course, many more ounces produced. Guanajuato is over 1 billion, Sandy Mas 582. So more length, more production, that just makes sense intuitively. The lower half of this slide, the length of those white bars represent the mined length. So if you look at Tonopah at the top, at 4 kilometers, add 1.5 kilometers onto it, let it run for another 2.7 kilometers, where we've made 2 new discoveries, and it fits in quite nicely with how big these districts can get when they really get to be truly world class. And that's the type of swing that we're taking on our projects.
That's great. That's a great explanation of that chart and your strategy. Now, I've noticed that you're about to embark on a drilling program, or you have recently, but your team has been spending a lot of time lately analyzing historical project data and doing geologic modeling on both of the projects. Can you just give us a quick summary of what all this work is telling you about the property's potential and how it helps you prepare for the coming drill campaign?
Yeah. Well, I'd like to say there's magic in the old data. And some of the old maps we have and all the different levels of each of some of these old mines that we're working in and sections, you can build 3D models from maps that were made in the 1930s or even before that, if you have that data. So we've got all of that data and have done that work. And it's an iterative process that continues. And really, it's a little bit of a part of our secret sauce in that we started doing that in 2020. Our first drill holes were very strong, and it was just based on the back of that. You hear a lot about fancy geophysics and fancy arm waving ideas. Well, this is just like back to basics, and like the keep it simple, stupid premise really operates here for sure. So that's just a little bit of our approach to discovery, and so far so good.
Now, I'm just like a kind of mining neophyte question. Now, regardless of grade, is there a rule of thumb for what makes a critical mass of resource that would ensure a project's big enough to get funded or to make you a takeover target? Let's just assume the grade is average to above average.
You know what? I think, the quote unquote number that, I keep hearing about is 100 million ounces, okay. And somewhere in that neighborhood, I think things get very, very interesting. But not all ounces are created equal. Grade does matter, and there's a difference between 50 grams per ton in a big open pit and 500 to 1,000 grams per ton in a good sized vein underground. So that's one thing. That's one thing to think about. The other thing to think about is location matters, like location, right? When you're thinking about real estate, and ounces in Nevada, which is one of the places that we're working, are very, very valuable, I think. Nevada consistently ranks in the top 3 of best places to invest your money in terms of jurisdictions, according to the Fraser Institute, which is our think tank in Canada. And that's for a reason. They're very familiar with mining. They're very familiar with exploration, and they value it greatly.
Great.
I have a question here. Galen, I'm going to toss in some YouTube questions. Good question here. Galen mentioned that there's a series of stakeholders involved with the property. What does community engagement look like? And I know you've mentioned this in the past, but I think that's something that stands out with respect to Summa.
That's definitely a really good question. And community engagement for us is a core pillar of our approach, as well as in environmental studies and environmental science. Where, well, I'll give you an example. I was just down in New Mexico about 3 weeks ago, touring federal officials, state officials, meeting with local politicians, and meeting with our partners that we work with there. People that help us, move our machines around. What it really comes down to, I think, core philosophy is doing what you say you're going to do and following through with that. Really, I'm a guy from Canada, and that's completely different than rural parts of the Western U.S. So we need to build relationships slowly and keep our word, and that's something that we take very seriously.
Great. Now, based on the most recent geological data you're seeing, does Nevada or New Mexico hold the most promise this year, would you say?
You know what? I want to have a more definitive answer for you, but it's really difficult for me to answer that. So we're about to start drilling in Nevada presently, very, very presently. Or excuse me, in New Mexico. I'm sorry, I mixed that up. Very, very, very presently, where we're going to be taking a shot at some big step outs. We've already had some great results there. But rewind to this past summer, and in Nevada, we made 2 new vein discoveries on an eastern extension of the entire district. So, you know what? I think this year is going to be an interesting year. Both projects will get some attention in 2024, some good amount of attention, and we'll see which one comes out on top.
Awesome. Let's see. Oh, I have one here that I was curious to ask you. Have there been any recent exploration results from other operators you think have implications for your targets?
Yeah, big picture, companies that we say, aspire to be one day. And you had that chart up on the last slide. Actually, throw it back up there again, and I can
let's
speak
bring
to
that
it
one back up.
Yeah.
Great.
I look at the companies in Mexico. I look at the Silvercrests who, maybe 5 years ago or a bit more were doing what we're doing, and they're about to go into production. They have a market cap of 1.2-ish billion. Take a company like Vizsla Silver. There's 200 million ounces there, a market cap of I think 350 million now. And then compare us on the right on similar types of projects, similar geology, but instead of in Mexico, we're in the United States. And we're sitting here now with with a $40 million market cap. It's actually a bit higher because the markets have been good. We're up a little over 50, but still, it's an outsized opportunity for growth, especially going into times when precious metals seem to be coming back into vogue again. But more specifically, a little closer to home, in the Tonopah district for us in Nevada, the company right next door to us very recently put out that 100 million ounce resource at I think about 500 grams per ton, very good grade. And the veins don't stop on the project boundaries; they continue. So when I see things like that, I think, geez, if there's 100 million ounces on that side, the west side, how much is on the east side, and how much is there globally in the entire district, and that guides our approach a little bit.
Galen, I have to say your graphs are the best. Like they really are like some of the most visually thinking about how you can really like triangulate the valuation. The buy button.
Yeah. well, thank
your
you.
slides evoke that buy button. No wonder you're in a suit, man.
Well, have you guys ever sat through a presentation and it's too technical and you just get the feeling that it's for geologists by geologists?
Yeah.
Yes. Often.
Yeah,
Totally.
me too. So I try to avoid that pitfall.
That's great.
No, but it really speaks to the it gives the generalist an understanding of what's what the opportunity, the upside here, right? And so, do you mind telling us what that company, the 100 million, the company that was close to you?
Yeah, right next door to us is BlackRock Silver.
Okay, got it. And okay, right. So, and what's their market cap?
I believe is in the $70 million range.
Okay, great.
Yeah,
great. That's helpful. Now, why don't we end it off with what's next for Summa? I mean, what are the key exploration catalysts you see coming next year or sometime sooner? There are assay results that are going to be coming out. What are we looking at?
Yeah, we've got one hole still pending, and that's probably going to come out in the next, say, 1 to 2 weeks. But for us, 2024. Yes, it is. That's at the
exciting.
That's at the Ruby discovery where we've already hit some new veins, eastern extension of the district. And this is a 650 meter step out from where we already know there's mineralization. The hole hit some interesting veins. So we think they're looking pretty good. And to tell you at Ruby and just east of the district, in a perfect world, I think that the geology justifies us having 3 rigs turning. So that's how I see this developing, perhaps in the not too distant future as markets develop. Something like that could definitely be supported here, where Yeah, the you can see there just to the right hand of this slide, the one hole with assay pending, it's out on its own. But that hole, the one that's labeled 3 meters of 1450 grams per ton silver equivalent just to the left, and then the one all the way on the far hand to the right, all of those require follow-ups. There's no holes around them. And if we're on to the extension of the Tonopah Mining District, I want to be taking a swing to find the next 100 to 200 million ounces.
Yeah, that's an exciting area.
But going forward, I don't think I mentioned, I didn't cover, what our catalysts are for 2024. So we're just about to start drilling in New Mexico now. And that's really what will be driving us for the next several months. And really, it's about drill results. We've always been successful with drilling, always very successful. And I think our chances are pretty good that that's going to continue. So for us, a big part of the thesis here is that, hey, always good drill results, high grade, United States. If you're interested in silver stocks, I think this is just a name that, needs to be owned. And we're in the SILJ ETF. And I think, that ETF was designed, with companies like ours in mind. So, yeah.
I mean, I don't know if anyone was listening. I hope you were listening to Dolly Varden, because you remember he said 80-1 silver ratio. He's going on record, going to 30s. So that's a good endorsement of owning silver stocks.
I'll second that.
There you go.
Hey, and before you go, Galen, you're in Zurich right now. It's a mining or precious metals particular summit.
Mining and precious metals, both.
Got it. And what's the energy
Yeah.
right now? Like, surely people have awoken from the slumber a little bit.
Yeah, optimism, guys, optimism.
Nice.
And I tell you, before we did this, we did a bit of a road show and went to 5 other cities, and I'm starting to see it all over.
That's great.
That's what I love to hear.
Awesome.
Galen, always a pleasure. Listen, I'm hosting a very special holiday spaces, Twitter spaces.
And eggnog fueled spaces.
Okay, good.
Gotta come. Shawn's promised he'll be there.
Shane Williams from West Red Lake will be there. Could be fun.
It'll be great.
If I can make it, I will be there. Just let me know when it is, and yeah, I'd love to join.
Wonderful, Galen. Thank you so much. And the best dressed out of the 2 days, man. It's so spiffy, man. Love it.
Yeah, we appreciate it.
That's what a bull market brings out, man. The good vibes.
That's right. That's right. Game time, guys.
Great.
Thank you, Galen.
Thanks very much.
All right,
Thank you
everyone.
again.
Great. That was Galen McNamara. He's CEO of Summa Silver, another interesting silver miner. Oh, and who's next, Tom? We got
You know what? Listen,
guest.
we gold, silver, Bitcoin. We had a great conversation this morning on just, Bob was phenomenal. It was Warren, gave some. Who knew he was laser eyes? Yeah, but great. We had great insights in the morning. But now we've got the man, James Seyffart, who's been right in this whole Bitcoin ETF bonanza frenzy. We got to bring him up.
Which is driving the price
Yeah.
to new highs. So we're going to talk to him in just a minute. Don't go anywhere.
Stay tuned. James, how are you?
I'm good. How are you doing?
Oh, good, man. You know what? I've the chaos of the last month of this ETF, Bitcoin ETF stuff. It feels like I don't even know when you get sleep, man.
It's funny. It's funny. I was literally like I lost track of time. It's my bad. I was literally on a call we have a guy that helps me set up like these alerts, like web crawlers looking for like all these filings that we're seeing. And I'm like, it broke. The web crawler isn't working. So I'm trying to get the web crawler working. And then, yeah, I dropped the ball here. My bad completely.
Oh, no. Well, listen, no worries at all. Like, we're actually, to be totally frank, we've been running late by almost 15 minutes, so it actually works out perfectly. So we had the whole schedule backed up, but it's totally fine. You know what? Actually, it's been a great day of conversation. We had Warren Pies to kick it off. And who knew Warren Pies was laser eyes, man? I had no idea. And then Bob Elliot came hard with the gold pump. It was epic stuff. But James, I gotta ask, this is such a crazy time. You're creating web crawlers because you need things to work in the middle of the night while you get your precious sleep, man. So I have to say, have you seen? You're an ETF analyst at Bloomberg. This is the craziest thing, and you're right in the arena. Like, is there any corollary to this ever? Like, this kind of frenzy to launch a single ETF that everyone's trying to do the same thing?
Yeah, this is I've said this before. This is a one-of-one situation, right? Like, this isn't something we've seen where like it's fascinating, right? So I just had somebody ask. I was on a Twitter Spaces like an hour ago, and somebody was like, what are you going to do when this is all over and these things are approved? And I was like, honestly, I'm excited for that because we've never been in a situation where there's now 13 filers. We just had somebody new jump in who's a European crypto ETF issuer, Pando, yesterday. So there's 13. I don't think they're going to launch with everyone, but we could have 12 plus people launching the same product on a potentially the same day. Like, we've never been in a scenario where we could watch like marketing and fees and all these different ways that people can try to pitch this, like compete against each other. So I'm really looking forward to that, to see like how this thing plays out, because they're going to be fighting over assets. They're going to be fighting over liquidity. They're going to be fighting over like basically survival. And there's potentially a lot of money at stake. I mean, you look at GBTC, the thing is a borderline broken product because of how much it traded at a premium and how much it traded at a discount. Granted, it solved a lot of people's problems at the time, but like that thing has $23 billion in it. That is not nothing. And that's probably going to convert over to the ETF at some point. So there's a lot of money at stake here.
That's a lot of money.
And James, like, it's capitalism and stuff, right? But it almost feels like this, if they don't let all of these guys launch at the exact same time and have a jump ball at the same, like, surely like this, it's going to be so crazy who's competing for the liquidity. Like, how do you view this playing? Like, they're not going to have this as a stutter.
Yeah, could regulators be called out for favoritism if they're letting someone go and then they hold everyone back for a few days or a week?
Yeah, so can you repeat that part again? Repeat that question again. I'm sorry.
No, the question is it basically they're going to just put everyone on the starting line at the exact same time, or is it just like, oh, you filed in January, you'll come forward? Like, surely I would think that, to be fair to all participants, they let everyone just launch at the exact same date. That's assuming that it goes.
Yeah, so our view is they're going to let them all go at once, right? So we just saw, we just saw that, like, so the only one that we could see potentially not being like that, like what you're kind of hinting at, is maybe Grayscale's GBTC. We could see the SEC trying to do something there where like they kind of delay them, but you could also make the argument that the fact it's just an uplisting is actually like should be easier because it's already trading OTC and it would kind of be an uplisting to the New York Stock Exchange. So there's a lot of nuances to be said out there, but obviously if they are labeled to go on the same day, the fact that they can go over there, I mean, if you take GBTC in the US as the over-the-counter trading product that it is, it would be the 109th most liquid ETF in the US, which is not nothing. I mean, this is $7.6 trillion market. GBTC would be nearly in the top 100 for trading liquidity. Also, it'd be in the top 50 for assets at 23 billion. So this would be a huge advantage that they would have. So they're the only one that, like my colleague Eric Bartunis, kind of thinks that maybe the SEC would find a way to like slow their roll. There's a lot of arguments right now about the in-kind versus cash create and stuff, which we can get into. But what we saw happen this week specifically, so this is brand new, I just have a note out today talking about this, is the SEC last week they issued delay orders on Hashdex and Franklin, or 2 weeks ago, and Franklin Templeton on November 17th, and Global X as well. And basically all that was like standard practice. We kind of thought that was going to happen. If it didn't, I thought it was a possibility that it wouldn't. But basically what they did, there wasn't another deadline for the SEC to do anything on those applications till January 1st. And the SEC this week came out and was like, nah, screw January 1st. We're delaying those things right now. And what that means to us, so when you delay, so when you're going through this process, there's all these deadlines. The SEC needs to either delay, approve, or deny. And there's 3 deadlines where they can do that. And the final deadline is either approve or deny, right? The final deadline for ARC21 shares is January 10th. That's the main date we've been looking at. But all these other guys have different deadlines. At the second deadline, you have to leave this 35-day comment period. Basically, it's a way for the SEC. It's mandated that we allow public comment on like any sort of rule changes that's going in the infrastructure. In this case, a rule change to allow a spot Bitcoin ETF. So what happened is Global X was at that second deadline, and their 35 days doesn't end till December 29th, which is a Friday. Hashdex and Franklin, this is getting real in the weeds, but you'll understand why I'm going there. So Hashdex and Franklin, they weren't due for a decision until January 1st, which is a holiday, a Monday after the weekend, right? So all of a sudden, if they want to approve all 12 of these at once, there was no way to do it because the deadline was the 29th. They have to let that day go before they want to allow it. But then they also have to issue an order by January 1st, which is a holiday, and they can't do that then. So the way to get around that, the only reason they would have gone early in our view, because if they waited January 1st and delayed, then they would have had to have a 35-day comment period for Hashdex and Franklin. The only reason they would have gone early is so they can line everybody up for approval on the same day, which means that, so right now you have this deadline for Global X, that's December 29th. We don't know the exact deadline for Hashdex and Franklin. It's likely to be somewhere around January 5th to 8th, maybe. So that means there's going to be a window from January 5th or some other date and January 10th where all 12 can be approved, which has been the date that we've been saying for months that this thing is going to happen by. So now we're really narrowing in. We thought there was a possibility we could see approvals in December, but the move from the SEC this week tells us that the approvals, again, if they happen, we're 90% odds that they're going to happen by Jan 10. So this move by the SEC basically confirms for us what you were asking. They are lining every single person up to go on the same day.
I got it. Okay, yeah, that's actually exact question, and 90% odds. That's a high probability. I love the confidence.
Let me clarify something with them actually. So you're saying that by January 10th, SEC has to approve or deny, right? That one fund.
Yeah. So I talked about all those deadlines, right? So it goes 90 days, 60 days, or no, 45, 45, 90, 60, whatever it is. There's 4 dates, right? The final date is the date where they can no longer delay. In history, they've always delayed everything, and then the final date, they deny them. That's what they've been doing for over a decade. ARC and 21 shares, their application was the first one to file. They filed in like April or May of this year. I don't remember the exact date off the top of my head, but they're the first one up, right? So January 10th, the SEC can no longer delay, right? They have to approve or deny. And our view is exactly. And BlackRock and all these other guys that filed in June, they're due in like mid-March, roughly. So my view, and something I've been saying for months and arguing with people like, no, they're going to deny ARC and allow BlackRock. Look, the SEC is not going to be able to come up with a way to deny ARC and then approve 2 months later as though all this stuff has changed and allow BlackRock to launch. So if they're going to approve what we're referring to as this cycle, we look at this as a cycle. So one company files, everyone else follows suit because they don't want to be left behind. Essentially, if you're like even a couple days behind, it could be make or break. If you look at BITO, the Bitcoin futures ETF, it launched. That thing has $1.5 billion assets. The next ones from Valkyrie and Van Eck have like 20 million. They have like nothing in them essentially because BITO won. So everyone wants to be in the same day. So this cycle, it really comes down to January 10th. Now the only way, so I said 90%. We initially had the 90% because we were like, Gary Gensler could do anything here. He works with Elizabeth Warren. They don't like crypto. They could deny this thing if they really want, even if everything is indicating like that's not what's going to happen, right? That said, that's still a slight possibility, but our 10% now is if the SEC truly isn't ready and they don't want to approve these things, the one way that they could push back that January 10th deadline, and again, this is in the 10% odds camp where we're talking about here, so kind of a fringe in our view, is that if the SEC convinces ARC and 21 shares to withdraw. So they would go in and file something and saying, we're withdrawing our application, and then they refile. And they would only do that probably if they get some confirmation or something that the SEC says, don't worry, you will go with everyone else. We just can't do it right now. You need to refile, and then we'll let things go like a couple months later. So that's how you get beyond Jan 10th in our view in the most likely scenario. But again, I think that's pretty unlikely. We know for a fact with all these meetings, the SEC is meeting with a lot of these issuers, debating a lot of this like super nitty gritty, deep in the weeds, nerdy ETF stuff that like would only matter if you're getting ready to launch this thing.
It's incredible. And so we're, typically you get, the leader, and as you say, in any ETF, and that takes liquidity. How do you view this jump ball scenario playing out? Like, so 90% chances that this all happens and we got all these guys coming out at the same time. How do you view where the liquidity will go? Will it be like the company that spends the most on marketing? I have no idea. Like, how does this play out?
Yeah, so I'm going to answer something you didn't ask first, and then I'm going to get to that because I want to be clear here. All these dates we're talking about are this is the 19B4 filing. These are the filings with all those deadlines I was talking about. For an ETF to launch, you technically need approval in two areas. The 19B4 process is through the Division of Trading and Markets of the SEC. That's the thing that matters the most. That's the most important thing. Now, theoretically, you could get approval under that process and not be able to list yet because you also need basically, we call them S1s. They're prospectuses, offering documents, depending on who your client is. They're basically the filings that the multi-hundred page documents, like this risk disclosure, how the fund's going to operate. That needs approval from the Division of Corporate Finance at the SEC. So once you get the 19B4s, it's only a matter of time in our view before you get the S1 approvals, like significantly. But if there could be a situation where we get the approvals and these things don't launch yet because they don't have sign off from the SEC's Division of Corporate Finance on those prospectuses. Now so, and then the main part of your question was like, how are these going to work, right? How are assets going to work? One, I think if Grayscale can convert over on the same day, the fact that they're coming over with this level of liquidity, a well-known ticker, and that many in assets, they are going to be tough to beat. You also have BlackRock, which is the largest asset manager in the world. They are the largest ETF issuer in the US. They are just an absolute behemoth. So competing with them is going to be very hard. There's a lot of advisors that use their products and trust the BlackRock brand name. So then the other thing I would say is that like ETFs are not like typically a winner take all scenario, particularly in large like markets or large you can have a large amount of investors, right? They tend to be winner take most. So usually one or two become like one becomes like the liquidity model. Like that's where everyone trades. And then there's usually one that's like way cheaper than the others, but doesn't trade as much or might have some differentiating factors. So that's likely what's going to happen. There's going to be room for multiple of these things to launch and be successful, profitable funds for their firms. Now, is there room for 12 to be successful, profitable funds? I'm not really sure, but I think there will be multiple. And some of the other ways you could do it is like, so Bitwise has been around for a while. Valkyrie has been around for a while, but Bitwise, like they are focused on crypto only. They have a lot of SMAs. They already work with advisors, so they have a good basis. Invesco is partnered with Galaxy Digital Research up in Canada, right? They're based, they trade up there. So there's other ways to do this. And then Van Eck has been like kind of pseudo in the crypto world for a very long time and doing this. They're the first TradFi filer to file it for a Bitcoin ETF. They have a lot of connections in the space. And then you obviously have Cathie Wood and ARK partnering with 21 Shares, which is the largest crypto ETF issuer in Europe by the number of products they have outstanding at least. So like there's all these different ways. So you'll be able to market it. You're going to try to do it with your distribution channels. One thing that ARK, we just wrote a note on, is interesting. ARK has a significant position in GBTC. So you have to assume when they get their ETF approved, which will be ARK-B, they're likely just going to transport $130-ish million they currently have in GBTC and plop it right into ARKB, which is like automatically, like even though it's their own money, it's automatically going to be like a way of seeding the fund with their own clients. And it will be, if you compare it to GBTC, which is charging 2% fee, trading at discount right now, ultimately. And then obviously fees are going to be huge here, right? Like no matter what you do, if BlackRock, even with their name, if they come out and somebody is half the cost and offering the same thing with like the same or similar custodian, like they're not going to be able to dominate. So it's going to be very like cutthroat to like get fees down. Like I'm not saying everyone has to be the lowest offering, but like if you're Grayscale and like somebody comes in at 60 bips for 60 basis points and Grayscale's like going to only drop GBTC from 2% to like 1% or something like that, they're going
Yeah.
to lose a lot of assets. So like,
Sh- sh-
as long as you're close, it'll be close.
What are you hearing in terms of what the MER, what the general thought on MER? Because like when I think 60 beeps or 60 basis points, 75 basis points, I'm thinking active management. These guys there's no active management holding a Bitcoin, just maybe I can understand that better. Like what should the lowest?
And do you even know? Like, is it in filings or they are holding it back right now?
Yeah, so there's two things here. One, it is going to be relatively expensive, right? The cheapest I could see them going is 50 bips, but the problem is I don't know what these custodians charge. I don't know what these third-party administrators and all these other things charge. And you got to realize, because you're connecting the TradFi world with the DeFi, Web3 world, whatever you want to call it, it's two like different areas. Like there's a lot of stuff that's happening in the back end. Like in the TradFi world, you can have the same custodian and administrator and all these things for your cash. Like you need a custodian for your cash. You need a custodian for all these other things. The market makers it's less efficient to kind of create these products. That's kind of like what's arguing right now at the SEC. So it is going to be higher costs just because of that. But these launches are going to drive costs down. Now, have we any inkling where prices are going to be? The only people that have put their expense ratios or MER in their filings is ARK. And ARK initially came out at 95 bips.
Wow.
Like a few months ago, right? So they came out at 95 bips. We're like, oh, that seems really high. That's like what the futures cost, which whatever. Yeah. And then they came out with another filing and it was 70 bips. And then the most recent filing is 80 bips. So like the question is,
wow, they went back up. Okay.
So, but the question is ARK like just playing games here? Like, are they like just throwing this out there? Because technically it's not a final prospectus. They don't have to like abide by any of this. So the question is, are they just like kind of maneuvering against all these other issues? Like I said, this is going to be a jockeying for the start of a race. It's like trying to get everyone in before the race guns go off in a horse race, right? So like, is this a move by them, or are they actually like talking to the custodians and all these other third-party administrators they're dealing with and finding the fees are higher or lower or less? Or is this just them playing games? And there's no way to really know. We saw this with Ethereum futures ETFs. Roundhill, who's a big issuer, they've launched the meme ETFs. They have a lot of known like retail love products in the ETF space. And their Ethereum futures filing, they put like their expense ratio at 20 bips. And I talked to multiple people and they were like, they will be absurdly unprofitable. They'll be in the red, like in perpetuity, unless they get billions of dollars at that fee. So
well, they got that meta money, it goes a long way.
This is valid. They did sell the meta ticker, or I guess I can't say they sold it, but they gave the meta ticker
run on the billions.
Oh man, James. Yeah. So just putting it together, phenomenal conversation. I've learned a ton. Now putting it all together, James. You mentioned this like ARK, saying, hey, listen, I'm going to pop this over here, but that's already in kind of Bitcoin as well. But with respect to fund flows, any estimate, like, because this is the biggest step to normalizing Bitcoin that would ever happen. Is anyone postulating, and these are big firms, these are big asset management firms doing this, is anyone postulating what, and I know it's pie in the sky, but where AUM could be in the first year, and, then that would help us think like where this could drive Bitcoin.
Yeah, so I actually wrote a note trying to pontificate on this.
But the best. When'd you do that?
Last week.
So okay. Oh, sorry for that. Well, listen, I gotta find that.
We'll find it. We'll go in the
yeah. We'll post it, guys. Anyone who's watching, we'll post it in the YouTube notes. Thanks for that, James.
Yeah. So the best research I've seen out there on this topic is from Galaxy Research, actually, who's partnering with Invesco trying to launch an ETF. They're estimating 14 billion. I think that's high personally, but the problem is you have to try and figure out like where is this opening buying from, right? Like who's going to be able to buy now that they wouldn't have been able to in the past? And for the most part, it's brokers, wirehouses, and investment advisors. But you got to realize at those places, there's usually particularly the biggest places, there's like a long time period, years even, before like they're even allowed, like in a broker or an advisor is allowed to buy some product, right? So like basically the compliance process, we need some track record, we need confirmation and all these different things. So it will likely be years for some of the bigger players before they even allow their advisors to buy this thing. That said, some of the smaller, more nimble players might be able to buy literally within like the first week. Even still, I think a lot of advisors, you got to realize the advisor space, that's the biggest opening for me. There are institutions that will get access to this as well. It'll be easier for other ETFs to buy Bitcoin now because of the spot Bitcoin ETFs if they get approved. But advisors, they're going to put 1%, 3%, 5% of their client assets in these things, right? It's not like they're going to be putting tons of money in it, which is why a lot of advisors haven't really bothered with Bitcoin yet. Yes, there are products out there where they can like buy it directly and store it for clients. Most advisors don't want to deal with that. Maybe if it was going to be a way bigger portion of the portfolio, but for 3%, it's like, why am I going to sign up all these other increase my tech stack by like 5 different companies to get exposure to this? The ETF is something I can just buy immediately. And the spot ETF is way better for long-term holding. Right now, the futures ETF BITO, which is it has 1.5 billion in assets. It's an all-time high in assets as people are like hyped up around this potential spot launch and they want exposure. But that thing is trailing spot Bitcoin by over 10% year to date due to the rolling of futures. So advisors, that's not a long-term asset. That's if you want to get exposure to Bitcoin for the short term, weeks, even months at times, like it's a very good. It trades penny wide. There are going to be no commissions like you have to pay on a lot of crypto platforms, right? So it is good at that, but it's not good for long-term hold for these advisors. So this is going to bring this under them. And again, those are the types of advisors that will put this in. Obviously, BlackRock, Fidelity, they have a huge distribution network with these advisors. And it's not something that's like, oh, the ETF launches, I'm putting 3% of like all of my clients that I have, I'm taking 3% and putting it into Bitcoin. It's more like this subset of my clients is going to go into Bitcoin and I'm going to put 3% in. And it's probably going to take them months, if not years, before they really go in and make that allocation. So the long-term flows are going to be more important than what happens over the short term, because that's going to be more tactical trading of money coming in. So that's the way to look at this. So we estimate, I estimated around 10 billion, maybe on the first year, if we can get lucky, which likely those types of flows aren't going to be something that's going to be driving the Bitcoin price, right? But the bigger deal here, in my opinion, is what this says about the SEC giving like the sign off, the green light on Bitcoin as an asset here. It's not regulatory clarity as much as like a market structure bill or something from Congress in the US would be, but it is a little bit of clarity. And a lot of issuers, I mean, a lot of advisors have said they're worried about the regulatory aspect of Bitcoin before they want to invest, and they want to spot Bitcoin ETF. So like all of a sudden, this is going to clear up the top 2 reasons that that advisors don't have access. And then real quick, I'll just say, the other way I tried to look at this is like we looked at ETFs in Canada and we looked at crypto ETFs in Europe and looked at the size of those markets and basically said, okay, this percentage of assets is in Bitcoin or crypto assets in Canada. This percent is an ETF. The US market is 40 times the size of this. So what could it be? So if you look at Europe, which I don't think is the best, I think Canada's a way better argument to compare them to. You would say, but Europe would say we should have about $33 billion in crypto assets. And if you look at Grayscale, the Bitcoin futures ETFs, the Ethereum futures ETFs, we're already at 31, right? So again, that's the Grayscale trusts are not ETFs, but that is $31 billion of traded exposure that anyone can get access to. If you look at Canada, which I think is the best comparison, we should have 70 something billion in assets in these things. So again, we're at 31, we should have 70. That said, I think some of that is overblown. So which is why I got to the 10 billion. I think we could get like 40 within the first year into crypto ETPs. The reason I think it's overblown is because I think a lot of the money in the crypto and Bitcoin ETFs and Ethereum ETFs in Canada, some of it is institutional money from the US because they don't have access to this in the US. We saw GBTC's premium collapse right around the time that spot Bitcoin ETFs launched in Canada. So I think some of the money up there is also some of the money that would likely come down to a U.S. spot product. So
some shadow American money.
Yeah. But I want to be clear. Like I'm doing the best I can at guessing what's going to go on here, and there's no way to know.
No, you're thinking through it completely great. Like, and so 70 billion in Canada. What percentage of AUM is that? Like.
Oh, sorry. 70 billion is the equivalent if you multiply the AUM in Canada by the numbers
based on
the US number. Correct.
Sorry, my bad. What percentage of AUM in Canada is Bitcoin? Is it 1% or is it smaller?
It's about 1%. Yeah, I believe.
Okay, and that's pretty significant, right? Yeah. Okay, I got it. Okay, so yeah, I totally understand. James, thank you very much, man. I really appreciate awesome. A phenomenal conversation, and thank you for all the math on this.
Yeah, I try to do my best to distill it. It's funny. I talk to some people and it's like, I'm mostly in the TradFi world, and I feel like I'm like this uber bull about like what's going to happen. Like this is a big deal. And then I talk to people in the Bitcoin world, and I'm on these spaces in the crypto world, and I'm like the exact opposite. I'm like pouring cold water on these guys. Like, relax. It's not going to be like world changing. This isn't trillions of dollars. Like BlackRock's
We
not going
want
to put
more
$1 trillion.
radical, James. More radical.
Yeah. So
for every 10 likes, he gets more radical.
James, thank you so much, man. Honestly, I can't wait to do it again with you. Always great insights, James. Thank you very much.
Yeah, thanks for making time.
Yep. Thanks, guys. It was a lot of fun. Sorry, it was a bit late, but happy to do it again sometime.
No worries.
Awesome.
Thanks, James.
That was James Seyffart. He's an analyst at Bloomberg LP. All right, everyone, the train keeps rolling. Don't go anywhere because we have a Bitcoin miner coming up next, and we're talking about the potential of all these flows into Bitcoin, so this will be exciting.
Exactly. Hut 8. Welcome back to Grizzle Hard Money. It is a pleasure to have Sue Ennis, a VP of Corporate Development at Hut 8, a Bitcoin miner. Sue, thank you so much for joining us.
Hey, super pumped to be here today. Big fans of your guys' show and looking forward to getting into it.
Thank you, Sue. And you know what we got to do in the future? We got to do a Twitter Spaces together. This is like, you know what? We need to bring that energy. This is like, you've been on fire on Twitter. This is an incredible time right now. I don't know if you caught some of James's stuff, like James Seyffart, Bloomberg, but this ETF I personally think this could be that, like, maybe we'll start there just as a continuation. Your thoughts on how, what kind of the landmark it will be if it gets approved. And, James's view is that it's 90% approval. I don't know, like, what are you hearing in the crypto community on this, and how important do you think this is?
Yeah, so we absolutely think that this is going to get approved. And this is going to be incredibly bullish for the price of Bitcoin, we think, because obviously spot Bitcoin ETF means one-to-one backed. Looking at things like how a lot of the issuers have been making amendments to their filings, again, that's a bullish indicator. It means that conversations with regulators are happening and going in the right direction. Obviously, January 10th, like the guy on before me talked about, is sort of going to be the big make or break day to see who gets through then. But yeah, in terms of demand for Bitcoin and Bitcoin price action, we think it's going to be incredibly bullish. I was reading a report last night from AllianceBernstein, who actually is forecasting that they think 10% of all Bitcoin in circulation is actually going to be held in ETFs, which again is pretty meaningful in terms of institutions now having this on-ramp for adoption, right? And then from a miner perspective, this is incredibly good for miners as well. So Hut 8, we're one of the largest miners in North America. We're actually in the middle of closing a massive merger and becoming a U.S.
We're going to talk about.
Huh?
We're going to talk about that for sure.
Yeah. But look, this is incredibly bullish for miners as well, because number one, we mint new Bitcoin. So obviously a higher Bitcoin price is incredibly good for our revenues. Number two, transaction fees, right? We're also in charge of securing the network and facilitating transactions. So it certainly is great for us. And then, we are going to get into, I'm sure, some of the dynamics of the mining industry, but high level, some of the other rhetoric around this Bitcoin ETF being approved has been, mining stocks right now are a high beta opportunity to express an opinion on Bitcoin for institutions, and that's going to go away now that there's an ETF. We don't think so at all, because a lot of miners are actually diversifying their businesses, getting into things like providing AI compute, managed services, like which is kind of like the CBRE JLL for mining infrastructure and energy infrastructure. So miners are still not only, we think, going to be a play on Bitcoin, but also really like a call option on some super high growth areas as well. So yeah, we're super pumped about all of it.
So this is a great time to talk to you guys, because you're a Bitcoin miners in transition, I would call it. And
Yes.
so you're very close. It seems like days away from closing a major merger with US Bitcoin Corp. Now I'm wondering, what will the company look like post the merger? Could you just give us a brief overview of the business lines and the footprint?
Yeah, so post-merger, we're going to be managing almost about a gigawatt of hash rate power, which is of total global Bitcoin hash rate power, which is about 1/15th of the total global Bitcoin network. So that's a huge amount of hash rate and power we'll be managing. We're going to have self-mining. We're going to have hosting, aka cloud co-location, and supporting AI compute. We're going to have a really meaningful business called managed services, which is effectively like an end-to-end management services business for enterprise infrastructure. So any enterprise that says, hey, I want to use mining to balance my renewable grid or to help capture methane mitigation, but I don't want to run the machines. I don't want to do billing. I don't want to do anything that has to do with effectively setting up and running these operations, procuring equipment. That's what this business does. There's about 680 megawatts of power that we have under that business line. And we've partnered with 2 major renewable power providers and are servicing them on that side. So we're excited about that business. Again, it's kind of like the CBRE, JLL, is sort of the real estate equivalent of this managed services business. And then HODL, we have over 9,000 Bitcoin on our balance sheet. We're very bullish on hanging on to some of our Bitcoin because we think price action is going to go up and to the right. And in past bull markets, we've actually earned yield off of portions of our HODL Bitcoin. So it's another sort of income stream for us. So I think to wrap it up in a nutshell, effectively what this new HUD is going to be is what I've been calling it, sort of like the Berkshire Hathaway of Bitcoin. So you have HUD 8 Holding Co., but then you have a bunch of different businesses underneath, the HPC, the managed services, the HODL. And so, yeah, we're really excited.
Now, I want to get to the coins that you're holding on to and your strategy around that. But first, I just wanted to talk about the rationale for the merger. So I was looking through the slides that you guys have. They're very helpful. Diversification came up a number of times. So yeah. I'm wondering, can you talk through the ways you think this merger has made HUD 8 stronger and how it diversifies your business model?
Yeah. So one of the things when we were thinking about who do we want to dance with, who do we want to get married with as we continue to grow, one of the things we were really thinking about is how with the upcoming halving in May of 2024, revenues are going to be cut in half. Difficulty is going to increase. And so we think that single-threaded miners who are reliant on really the capital intensive nature of this business are going to face a lot of headwinds. So we said, how can we design our business so that we can be agile and pivot? So we're still bullish on Bitcoin. We're still going to keep mining Bitcoin, but what are the other areas of this industry that we can service and earn fiat and have high margins and continue to stay competitive and stay relevant in this industry beyond just chasing super high CapEx intensive and diminishing rewards. So that was sort of our thinking and philosophy behind it. Yeah.
That's great. Now, I wanted to get into the mechanics of mining a little bit because you guys have been through cycles. You're one of the largest miners, as you said. Can you just help us understand the trends in mining difficulty? Because we've watched this over time. So historically, mining difficulty would decline with prices. I saw in like 2019, 2021 that happened. But then in 2022, difficulty has kind of been going up pretty quickly regardless of what the price has been doing. Can you just help us understand what you think is going on in the market?
Yeah, so this has been a super interesting past year and a half, just to your point about some of the dynamics that are relatively unprecedented that we're seeing. And I think a lot, so for example, last week we actually hit a hash rate all-time high. And a lot of that has to do, well, there's a couple different things at play. Number one is equipment has gotten exponentially more efficient. So we've moved from 37, 38 joules per terahash now down to anywhere from 23 to 25, 21 joules per terahash. So we've seen increased efficiency of equipment. We've seen equipment prices come back down. So a lot of equipment went on sale in the bear market. So it was a lot easier to procure equipment. There wasn't incredible amounts of supply chain disruption that we saw in 2021. So if you wanted to get your hands on equipment at a reasonable price, you could do so in the past year and a half. Another thing we're seeing is a tremendous amount of hash rate being stood up in the Middle East. So one of the big drivers for hash rate being stood up in the Middle East is that countries like the UAE and Saudi Arabia, they've made tremendous renewable power commitments. And there's 6 gigawatts worth of renewable power coming online in the next 5 to 10 years in that region. One of the problems with renewable power, particularly when you're in the desert, is that it's incredibly intermittent and requires load balancing. And so traditionally for renewable power grids, you need to be co-located with like a natural gas plant, with a smelting plant. And that obviously is not always a match given, where renewable power usually gets located to where, the best ways to absorb renewable power is. And so this is where miners come in because we are able to power up and power down and effectively serve as a load balancer for grids. And so we've seen a lot of demand out of the Middle East for mining infrastructure because that's what they're choosing to use as part of their toolkit for balancing loads. And so that's sort of like the new hot player in the industry that is affecting hash rate for sure. These guys obviously also have unlimited pockets, like 1 cent power. So it kind of where Bitcoin is going for them because they can afford it. So.
So is your expectation going forward that the hash rate should continue to increase?
Yes. Yeah, definitely. As we see, again, more miners continue to upgrade their fleets. Again, if we see adoption of a Bitcoin ETF, the BTC price action goes to like again, Alliance Bernstein's forecasting 150,000 price per coin by 2025. I think Kathy Wood said north of 100,000 in 2024. So definitely, if we see that price action as well, we're going to see even more people jumping online and jumping into it. So, yeah, it's an exciting time for sure to be in the industry.
So maybe I could just ask a very simple question with respect to the Hut 8's business model's leverage to Bitcoin's price, and how I should think about that, in simple terms. Is it very much like do you have that do you have that inherent leverage,
and maybe pre and post merger too?
Yeah. So I think as a whole, so Bitcoin year to date is up like 130%, and then mining stocks as a whole are up 151%. And Hut 8's beta to Bitcoin is about 1.2. So we go about 20% in either direction that Bitcoin is trading, which again is pretty great. We're also incredibly liquid. We trade a little bit on average right now, about 16, 17 million shares a day, and that's on like a non-sexy Bitcoin price day. So it's pretty easy to get in and out of our stock, which again is why a lot of institutions and obviously retail really love the mining stocks for expressing that opinion on Bitcoin. And then, as again, post-merger, we're going to continue to hold on to our Bitcoin. We're going to have a little over 7.5 exahash of self-mining, which is incredibly competitive. And then, like I said, this services piece of our business that has a tremendous total addressable market, and effectively is helping enterprise mining proliferate. So,
got it. All right. Last question for me is what is your guys' strategy on the Bitcoin? Does it change over time depending on the market? Do you have a general strategy no matter what you're going to hold? How do you think about it?
Yeah. So for the past 3 years, we have definitely been insanely bullish on HODL. And that is predominantly driven by my CEO, Jamie Leverton. So she is very, very bullish on HODL. There's been a bunch of times where I've gone into her office kicking and screaming that we need to sell some and reinvest back in the business. But when you look at the math and the modeling, in spite of, again, our fist fights, if you look at the math and the modeling, it makes sense for in our opinion, to hang on to this Bitcoin, given where it's trading, given that we're going into the next halving and supply is going to be cut in half. We don't want to be selling. We don't want to be mining low and selling low. We obviously want to be mining low and selling and reinvesting high, right? When we see a Bitcoin at 100K, 150K. So, so that strategy she hasn't really deviated from. Also, because we have such a tremendous HODL, it's enabled us to use parts of that HODL as collateral for loans to grow the business, for taking out a loan to grow the business, for deepening our relationship with partners like Coinbase to fund growth versus, again, selling that coin and missing upside. And so post-merger, going into the halving, we're certainly going to look at ways to put that coin back to work, whether we're putting it in a yield account, becoming a large Lightning node operator. There's a ton of different options here. And again, we like that optionality and what we can do, having that HODL.
Very exciting. Sue, thank you so much. And you look forward to staying in touch. And, it's going to be a phenomenal month ahead. But, we should do a Bitcoin focused, conference call. We need to figure out what we do after January 10th. There should be some bottles of champagne. And
yes.
We all need to recharge in the holidays because it's going to be fireworks right after.
Yeah, let's do it. Anyways, thanks so much for having me on, and we'll chat soon.
Thank you, Sue.
Thanks, Sue.
Bye, guys.
All right, everyone. That was hard money.
That was a heck of just a learning of hard money is really turned into an institution of what's that called? The Big Ten. The Big Ten that brings everyone together. It really the dynamics around what Warren and Bob just talking through the importance of commodities as a diversifier, and who knew. Warren laser eyes. He sees what Bitcoin is as a diversifier. Bob, great thoughts on gold, and then a phenomenal set of gold and silver miners.
This is what I love about the format. You get the investors that aren't they're not tied to the metal like a miner would be. And so they're giving their opinion just on how they would use it in a portfolio. And then you get also the miners who are very deep in the macro. And hopefully you come away seeing what we're seeing, that things are definitely thawing, but it's still a deeply depressed stock prices versus commodity prices that are already perking up.
Which is coming back to what Shawn was saying, his conversation with Frank Giustra, it's just that idea of he's never seen it this bad in terms of equity valuations, but the disconnect relative to gold, right? And so, fascinating conversations, especially around Bitcoin, what's about to happen. Guys, thank you so much for watching. If you are on Twitter, everyone, a big thank you on YouTube. If you're on Twitter, thank you for the retweets. We'll get the segment clips out on YouTube. Please give it the thumbs up.
Remember this? How do they win one of these?
Oh, yeah, guys, you know what? If you retweet the stream, we're going to bring everyone's names in a draw. Let us know. And if you are on YouTube, just holler. I'm gonna, if the first person to throw up 5 hat emojis gets the hat, man.
Hurry.
First 3 people who throw up five hat emojis gets the hat. And then Scott, what was I going to say? Last piece, we got to thank our wonderful partners. Let's bring that up.
Lead partner here, Dolly, Varden, Silver. So hopefully you listen to them. They're one of the fastest growing mineral exploration companies, and they're your leveraged play on silver. And then we have 2 more. We have 314 Research, the next generation of investment research. You can check them out at the number 3, then the words 14research.com. And lastly, it's yours truly, Grizzle Research and Quant on Substack. What that is we use the power of quant and fundamental research to find ideas with asymmetric upside for you. You visit grizzleresearch.substack.com to learn more.
Hey, man, what a marathon. Boom, boom.
Hope you guys had as much fun as we did over the past 2 days. Man, lots of learnings. Great to get the little barometer of where the market is. As far as our hard money, things are looking pretty bright right now, but the valuations don't reflect it. That's a beautiful setup for us as investors.
Yeah, absolutely. And we're looking at perhaps arguably the biggest catalyst to happen in recent memory with the Bitcoin ETFs on tap. So hard money, here we go. Gold over 2K, Bitcoin doing big things. Guys, thank you so much for joining Grizzle Hard Money. And in case you missed it, don't forget yesterday's uranium one-on-one. We're still getting tweets, and everyone's like, that was an incredible run through uranium, and the battery metals was fantastic as well. Great insights on a set of metals that's going to really be the foundation for an electric future, which is definitively the way, a part of our future economy is going. There's no denying that, right? So you combine, uranium, which I thought Bloomberg gave a great overview of listen, if you really want to change, if you really want a new world and a world that forget about carbon but just emissions, it has to be a nuclear world. And what we're seeing right now, specifically Cuppy's conversation in the beginning around price action around the uranium price, it's going to be incredible. If the deficits continue, and Lee Gehring was phenomenal. That was such a great closing as well.
Yeah, exactly. That was a great time.
Guys, thank you so much. Watch the two conferences. They were fantastic.
And where can they find us when we're not going live for 2 days straight?
Oh, yeah. Well, first place to find us. Read our research. And you know what? We spend a lot of time, when we think about markets deeply, and we bring that in our Grizzle Research and Quant. Go there. Our third partner, Chris Wood, who's one of the most, he's an incredible strategist, global strategist. He's at Jefferies and also a partner at Grizzle. He writes a weekly missive. It's yours for free when you sign up to Grizzle Research and Quant. And if you want that extra as well, the analysis where we highlight what we believe are the most prospective opportunities in the market that are completely mispriced. That's our quantitative product. But again, go to grizzleresearch.substack.com. That's where you'll find that. And then also, if you want to find us in general, we're hanging around Twitter all the time, at Scott W_Grizzle. That's where you'll find Scott, at Thomas G_Grizzle, me, and at Grizzle Media, where you'll get
you get it all smushed together.
Thank you, guys. Yeah, definitely sign up for the mail, and also all of our great partners here. Give them a follow, see what they're doing. These are some of the greatest voices in hard money. We had some of the greatest voices in uranium, and we had a phenomenal run through the which we view some of the best base metal miners that are levered to the electric vehicle upside. And we had Tracy Schuchart, we had a closer in Rob McEwen and Mark Selby. It's phenomenal.
Yeah, across the gamut. So make sure to check those out if you missed it. And otherwise, that's all she wrote on Hard Money.
Wonderful. Thank you, Baz Howworth, Chris Petersman. Thank you very much. Baz was long Hut 8 when it was $15.
Wow.
There you go. So, guys. Oh, no, that was actually. Listen, guys, you know what? One day Bitcoin's coming back, and we're going to be in the mood. And listen, wishing everyone a phenomenal holiday season. Merry Christmas. Happy Hanukkah. Happy New Year. We'll see you Jan 10th, Bitcoin Freedom Day. Let's go.
We'll be back. See you next time.
See you.